Cool. So, hello everybody. How you doing? My name is Jonathan. People call me Big John. Today, I'm just going to go over some technical analysis over what we can expect in the week to come in terms of the major Forex pairs. I will be going over gold as well. Might drop a US 30 in there or something like that in the sea, but my main focus is obviously on the majors. So anybody in the free group or on YouTube will be able to catch any type of pips if the market does respect any of these areas that I do manage to suggest. So let's just see here. Just give me, give me a second, my friend. Let me get into the Zoom first before we start getting into too many questions. It can still be a Q&A. It's not a problem for me to do that. I don't mind answering people's questions. I do this every day anyway in the market. But of course, I just wanted to get into some pairs. But Simi, you do have a question straight away. Let's go into that before we go into anything. So you said how to handle this high volatility. So you've got to understand right now, yeah, let's put it from this point of view. There is a current situation of a possible war happening. Well, of course, there is a situation where it's, stemming closer and closer to a war, unfortunately. But as soon as Putin had made his suggestion on, going into basically a possible war, let's just call it that for now, because it hasn't been declared as World War III or anything like that. It's created huge volatility in the market. And we saw similar events happening when we had Corona in 2020, basically. So it just shows you right now, the market is in a very fundamental state rather than a technical state. So you have to put yourself in a position where even if you are trading, you have to be what I'm teaching the students at the moment and what I'm trying to tell them. I can understand if you're a busy person, but the market doesn't care if we're busy people. That's just the honest truth. The market's job is not to care about our individuality, basically, in terms of traders. And right now I call it dynamic trading, which means that you have to be more attentive towards your charts when the market's actually moving, because before you might have been able to put a position in, like me, I'm a swing trader as it stands at the moment. Doesn't mean I don't scalp, but I do swing. So I might put a position in expecting for it to get to TP12 in 2 to 3 days. Yeah. But now, and I might just leave it. So I only check my trade every 8 hours, or maybe even 12 to 24 hours. I check my trade, most times even 24. And now I'm in a position where more or less I have to check my trade every 4 hours or before any type of news events can be released, because any news event that does happen means that my trade is in a certain direction and it can just reverse price all the way back to my entry, or even go the absolute opposite way. As you can see, a very high volatile market right now. So you just have to be more of a dynamic trader is the best way to put it. You have to be more attentive to your trade, and you've got to be looking at what news events are going to be released during the period of you being in your trade. News isn't already factored into it. It can't be already factored into it, because news has to be based on the market moving, and then news has to be released in order for them to make a decision on what they want to do with price. Do you get it? So it can't be factored into it. Remember, nothing in Forex can be absolutely pinpointed. If so, that would be game over for anybody. Nothing can be 100% in Forex, so it's not factored into it. I would say what happens is when you're doing a technical analysis, then there is liquidity in the charts. Yeah, so you have liquidity grabs in different positions. For anyone on YouTube or anything like that, there's questions being asked to me. I don't know if you'll be able to see the chat in YouTube, but I'm just answering these questions, and it's about high volatility. So there will be liquidity on the chart. I can just show you an example of this right now. So if we go over here, let me just maneuver this. Here's a perfect example. So on a monthly time frame, there was liquidity left on the chart here. Yeah. And there's liquidity even on higher time frames than the monthly time frame as well, by the way. There's the liquidity on the 3 month, the yearly, half a year, is all over the place. Liquidity is wicks that are being left behind in the market. I've explained this on numerous YouTube videos out there for people. I've also explained it the majority of the time in the mentorship as well. The VIP service is the mentorship. And you can see there's liquidity right here. So when they have liquidity, they use news events to go and grab this liquidity faster than usual. So that's what if you're talking about factored in, that is a sense of factored in. But that's what they're doing. It's not that they know it's going to do that. It's they have a reason to do it based on whatever the forecast of the news actually is. So if it's negative news, in theory, they can go and grab a sell liquidity. If it's positive, they can go grab a buy liquidity. Doesn't mean they have to with negative news. It might be vice versa. Just depends. Pin bars. Pin bars is basically liquidity, because pin bars are going to have the huge wicks left behind. So obviously, of course, there's going to be so many terminologies and different things to Forex. I want everybody to know that, but don't confuse yourself in Forex. This is what a lot of people do. I'm not saying it's you yourself, Tim. I'm saying a lot of people, what they try and do is they'll try and figure out every single thing they possibly can or believe they can in terms of Forex. And this is one of the things I try and do for people a lot of the time, especially when I'm doing these Zooms. I'm saying, stop confusing yourself by adding too much to your chart or too much information. The reality is, yeah, nobody knows what the market's going to do. Nobody knows. We can use our data to assess what the market can do, specific word, can do, but nobody actually knows what the market is going to do. So in order for us to be able to trade, we have to accept that fact. And the problem, that is a huge problem people have when it comes to psychology and trading within Forex. As human beings, we love to win. Everything we built when we do something in terms of like almost like a competition, we want to win. So our psychology is hardwired to win, basically, if we're doing something that appears to be a challenge. Yeah. And Forex is one of the best things in the world to teach people about themselves, because you're going to learn that you can't always win. And it's hard for a human being to accept that. So what we try and do is we try and figure out 1,000 different things that can make sure we don't lose in Forex. But I'm telling you, and you will see it. If I'm a liar, you say, John, you're a liar. You'll put it out. You're a liar, John. Yeah, you're going to get to a certain point where no matter how good of a trader you are, you're going to go through a losing streak. Just because that's how it works. It's impossible for you to win all the time. So don't worry too much about what they're trying to do all the time. Just try and continue your trading process is what I'm saying. And again, all they're doing with news is going for liquidity most of the time. Especially if they go against you, they're just going for liquidity. So the best way for you to look at that is just go to your higher time frames, not a specific time frame. I don't want anyone to think just go to the monthly. You got to go to all your specific time frames and start looking for liquidity. Remember, your job is a data analyst. So this is why algorithms, computers, and things like this can obviously pick up data a lot quicker than a human being, because it can search everything all at once if it needs to. Now, in terms for what you're doing as a manual trader, you need to go through your time frames and do your due diligence to check where liquidity has been left behind in the market. And again, we can clearly see that from the whole of April, all they wanted to do, the markets here, all the bankers wanted to do, all the big players in the market, they wanted to clear any liquidity here and down here. And this is why Euro USD is still selling at the moment. And now it's clearing the liquidity here. We can even see that they've even gone, so from this level, I'm just trying to see, yeah, they went a little bit lower than this level here, I believe so. Yeah, they just went a little bit lower to grab some liquidity here. So if they want to go any further than that, they're going to be going towards this area over here, as you can see. So we can see there's a support level right over here. I'm going to zoom in so we can get the level properly for you. So it's not just, oops, what's this? Let's go back a second to the chart. Let's go back here. I could see that question was on your mind from the get-go, Tim. He was ready. He was ready. As soon as I went live, he was like, boom, I want this question answered now. Give me a second. Monthly support. So let's go to a 4-hour time frame to make it better for us. There we go. So our next support level we're looking at Euro USD, if they want to keep going, is 1.01385. If they want to keep going, I'm personally looking for buys and them holding this support level here at 0.049. I'm hoping they hold the support level right here. They do a breakout and I'll catch a retest when the market starts to form new structure. So let me try and zoom in a bit more. I'm going to answer your questions. Don't worry, people. At the same time, of course, I want to make sure I'm giving out chart analysis to people that are looking to take trades. So something that I could see them doing, let's just say, and this is just a theory, it doesn't have to happen because I'll still go over every Asian session. I'll go to my charts and I'll check what the chart's actually done. But if I'm just looking at it from this point of view, I need the chart to at least break out from here. And then if it's going to do anything, it could break out here, it could retest, and then I'm catching a continuation of that trade from around this level here. This is not an exact level. This is me just giving an idea of how a setup can appear. It might not do it there. It could wait a whole nother week before it does it. But when it does its breakout and it goes to its retest area, that's when I'm going to look for an entry. Like I said, I'm very transparent with how I trade. I don't trade no super secret way. I keep it very simple, just based on price being either high, low, and I catch my retest on my trade. I'm just patient enough to try and wait for it. That's the difference. I don't try and look for a trade every day in that sense. So that's something I'll be doing. So just an idea of Euro USD. This is what I'm looking for. If anyone else wants to look out for something like that, a breakout, I'm looking for a retest, and then I'm looking for my entry on a trade. That's what I'm looking for, a buy. Of course, if Euro USD keeps selling, then guess what John's going to do? I'm not going to trade it. I'm waiting until I see my breakout, my retest, and buy. That is what I've chosen to do. Whether or not other people are continue to sell it or whatever, completely up to them. But that's what I'm waiting to do. Someone asked me in the general group like 2 days ago, and I told them I'm looking to buy Euro USD, but it's not ready yet. Let me just go here. Stop chasing. What do you mean by FF retailers? What do you mean, by the way? I know about retail traders, but what do you mean by FF retailers? All right, cool. So that's what I'm looking for on Euro USD, by the way. And if it goes any lower, there's levels down here. If people want to continue to sell it, you've got another TP level down here at the weekly support and another one down here at the monthly support right there. Chart. Yeah, of course. You're always going to have that battle, but like I said, I try to not put my mind in this whole battle between retail's institution, because you see what you're going to get. You're going to get a lot of people. I keep saying it all the time. You're going to get a lot of people on YouTube. They're going to come out and they're going to be like, yes, they're going to have so many different abbreviations for words. There's a so-so level at this point here where the bankers have put in so-so amount of this, and they're always going to draw their charts out like this. Then they're going to put their S up here. They're going to do this. They're going to put their S up here, and they're going to be like, yeah, once it goes here, and then it goes there. So they're going to call that the VWSC maneuver. When it does that maneuver, that's where you enter. Yeah, just try not to do that to yourself, what I'm trying to say, because the chart is always going to either just buy or sell. Doesn't matter, whatever we do call it. There's no way of avoiding being stopped out. This is what I'm trying to say. What you need to do, so you don't have a constant battle in Forex, there is no such thing as a perfect way to trade. Doesn't exist. I'm telling you, really, really, really doesn't. There is no way to not be stopped out. So it's pointless, because you're going to look for perfect setups and you're still going to get stopped out. Do you get where I'm coming from? It's pointless. What the major issue, I keep saying it to people, and I say, you can see every single Zoom, my voice doesn't change. I don't say, oh, well, maybe. No, it doesn't change. All you have to do, yeah, is two factors. Psychology, people struggle with psychology in Forex so much because they don't realize, again, you are going to lose trades no matter how good of a trader you are. Listen to what I'm saying there. You're going to lose. Don't worry about, because too many people are going on YouTube trying to figure out how to get best entry, how to avoid being stopped out, how to all this stuff. It's pointless. It's pointless. The chart's either going to go to a support or a resistance area. It's going to buy or it's going to sell. Now, there are better areas you can trade from. Yes, of course, because you don't want to find a 1 minute support resistance and then the market can move to a 4 hour, etc. And this is one of the factors that I do show you, like what I'm trying to show you here. Go to a monthly time frame and then go down to at least your 4 hour. Those are stronger levels of support and resistance in the market, and it'll be better for you in being able to figure out trades and what they can do. Do you get it? But you don't want to put yourself in a position where you feel like, I don't want to enter the trade because this is going to get stopped out here. Don't put yourself in that. This is why you have risk management. You can enter a trade 3 times and lose if you've got a 1 to 4 RR on average. You will still win. Some people have 1 to 5 RRs, and so on. So you just, as long as people can get over that factor that they're going to lose trades, just enter the chart. And this is how you can trade with just price action. If you realize, if you put yourself in that position, you'll be like, yep, this is something I can do. So now when we go over to Gbp Jpy, And again, if you've got any questions, please ask them. Don't get me wrong. But again, it's like we're literally going to have a conversation today if you want that to be the case. And obviously, we're going to do chart analysis while we have that. So GBP Jpy, this is a typical example of where people have probably tried to trade their usual strategy of you know, either it doesn't matter if it's breakout retest, it doesn't matter if it was reversals. GBP Jpy would have finished you literally because it just kept buying. So I'm just going to go to the microphone quickly because someone's mic is on. I'm just going to mute that mic there. Yeah, so it would have just kept buying. It doesn't matter what you're trying to do. Let's go to a daily time frame. You can see what I'm saying. Cool. So yeah, as we can see right here, so there was so many people that are probably trying to, you know, catch different types of reversals on this pair as it was doing all of this. We all knew this. It literally just kept buying. I was probably taking people out. It's no problem because there was no way for you to know where the end of that liquidity grab would have been. And when we go to a monthly time frame, they even went further than this level. Some people would have had a sell from this level. They went further. They went to the middle of nowhere, which is almost here. So let's go down to a weekly time frame and see if we see anything over there where it stopped. So here's where it stopped, and then let's try and see so people can see what I'm saying. So nothing there on a weekly. Let's go to a daily. Nothing there on a daily. The most we can see is previously the market had bought off of this level before. But this is what I'm trying to say. You're going to put yourself in that whole position. Some people are trying to probably find perfection in that trade in terms of a reversal. It's pointless. Let the market show its hand and then you try and find an entry. This is why I personally trade breakouts and retests, because then it's a better chance that the market has shown me it's looking to reverse, and then I'm trying to get in on the retest of the market when a breakout has happened. So if we go and analyze this trade right now, I've done all my levels here because that would have taken extra time in terms of the zoom. So we can see here that there's still a huge amount of liquidity left here in the market. Very, very huge amount of liquidity left here that it can choose to go and buy to, but we are seeing that the chart is starting to show us bearish direction right here. Let's go down to the weekly time frame. We can see right here that the market is now from this level here, it never decided to go back up on a weekly time frame, starting to sell down. And then let's go down to a daily chart so we can start to see the market a little bit better, as you can see here. So this is perfect for me. And this is a trade that I'm looking to trade in the VIP group as we are speaking. The only reason I haven't entered this trade just yet, because I believe the market wants to come back to this daily resistance level. Now, easy way for you to even suggest, you know, to yourself, okay, but why, John? Why is it coming there? Is it because of this, because of that? Now we can clearly see here, this looks like a head and shoulders pattern that is forming. You've got a left shoulder here, you've got a head here, and this is a neckline area right over here. Yeah. Now we can see that if the market tried to go to this area, wasn't too bad, and it kind of did push back down because we're seeing a sell. So if this was the sell pattern, and this is exactly how I explained it in VIP, if this was a sell from here, then it's cool. It's just going to sell. This isn't the only pair I'm looking at. I'm looking at different pairs. So it's just going to sell. It's going to go all the way down. But if not, we're looking at the market coming back towards this area here. Now I've called this a liquidity zone. So remember, there's liquidity all over the chart. So on another time frame, this is just a wick basically left here, but there's liquidity left all over the chart. So I'm saying to myself, okay, if it is going to do anything that I'm accepting, first and foremost, there's a neckline right here on this daily resistance level, which we can see on the daily chart. This was the candle that broke this daily level over here. Yeah. So what am I looking for the market to do? Just like how I caught the gold sell, I'm waiting for the market to go back up to this daily level and then catch a reversal. Again, this is one of the things that traders struggle with a lot because they're not willing to wait for the market to do all of this. And it's just how I choose to trade. A lot of other traders, they're going to see this happen, they're going to see this happen, and they're going to be like, John, I'm missing all these trades. I can catch all these trades. You can catch trades all over the chart. You can catch trades everywhere. You've got to choose what's good for you. And what's good for me and how I trade is I wait for it to get to a specific area, and then I'm looking for a trade setup. So again, for GBP Jpy, I'm looking for it to get to 165.314, around about this area up here, between 164.354 and 165.314, around this area here. If it goes into here, I will definitely be looking for a sell, and I need it to realistically respect this area, because if not, again, there's a whole bunch of liquidity in this zone here. So if it goes back up towards there, then it could be going for a liquidity hunt to clear out all of that. So again, going over that question that was avoid stop hunts, that's what it could possibly do if it gets to that level. But then why I say the psychology point is I'm not going to not enter the trade if it comes to this level here, because just because there's a liquidity here, because now it puts myself in a position where you start to do that thing where you're basically over analyzing. You don't need to do that. You're aware there's a liquidity here. If it starts going the wrong way, then I could say, okay, you know what, there's a liquidity. I'm aware of why it's gone that way. But if not, there's a huge chance it can sell off this level. As we've seen here, you can see there was a wick to this level and a huge sell off this level. So if it comes back to this same neckline, there's a nice chance it can continue to sell. And if I'm right this time, then this sell could be the better sell that goes all the way down to this level and so on further, literally like that. Anybody got any questions on what I just explained there? If not, we shall proceed and go into other ones. Cool. All right, let's go into the next one. Let me just do this quickly, just so anybody else can get in here. Like 1, 2. Here. Okay. Now we have got GBP USD, another pair I'm looking to trade myself as well, but I'm looking for a buy. Right now we're in the constant point of what's going on with this war, so I can see right now GBP and the USD is being majorly affected by any decisions that's happening between Russia, Ukraine, and obviously adversely affecting the rest of the world. So we can just see here that price has been at a nice high level here. Been continuing to sell for almost a year now, if not, yeah, definitely a year. Or is this June? So almost a whole year price has been selling for. Kind of crazy on GU. And now we've got levels here. So we've got this monthly support that is touching here. It's gone down to this level here. Now we can look at our next level. Let's go back to a monthly chart because it's touching that level, just in case it wants to break there. So in all fairness, it has gone down to this support. I did mark this out from, I believe it was the last week's Zoom call. I did tell people if it wants to go any further than that, then we're looking at this level. But what it can do is this 2020 though. There we go. If they do keep selling GU, it's actually funny because they left this liquidity with, of course, what happened with Corona when, when as soon as the news got released, shut all the borders, then price did a huge rejection off of this level. So it went all the way down because obviously closing all the borders, but to correct price, the massive sell, they've had to use a lot of force. I don't know. I think they started putting more money into the banks, into the system, basically. And then you can see straight away, boom, they've managed to push price all the way back up. But in doing that, what they have actually left here is they've left a huge liquidity wick down towards this side here. So the fact that they've left this here, this gives them perfect reason now to continue to sell, to go and cover this liquidity before actually finding a reversal. So if the market does break this level and goes down to here, then there's a huge chance they're going down more towards this level here. So ideally, at some point, they're going to have to stop around here and then find a support like this and then buy price back up. Let's see if there's anything else over here. Yeah, okay, see. So yeah, this is what your big situation is with GU right now. They can keep going down towards that level, literally. It's a perfect reason for them to do that. Do you want to see no, you can't say no wicks because you see what I just said about GBP Jpy. There is a wick above. What you want to see, what you want to do is just be aware of the wick. Yeah. But at the same time, if you see a rejection of a level that you believe price can buy or sell from, you still need to take the trade because that's risk management. That's literally it. Literally there. Your psychology always just teaches you. The best way to explain psychology all the time is you will win and lose trades. It's the best way to short story, basically, psychology. Because a lot of people, again, they struggle with that. They think psychology is like some way you can break down all this mathematics or something. You can't really do that with psychology. It's nothing to do with psychology. Psychology is an understanding of things. And it's just the understanding that you win and lose trade. So again, if the market, for me, this is a psychology point of view on GU right now. Yeah. Let's do this very basic for you. So There is a wick there. I'm aware of that. So I'm aware I can lose the trade because they can liquidity hunt. Yeah, cool. First part of psychology. Next part, I'm doing my analysis, yeah, to say if it doesn't, then how do I find a trade? So I'm literally waiting for GU to do this. So let's go down to a daily chart so it looks a bit better. Yeah, cool. So here's where I was looking for an idea of a trade on GU. Boom. You can see what happened for a breakout. I knew it wasn't really too ready though on this level because it just looked a bit too shy. This didn't look like enough of an uptrend, but we do see it. So you possibly I took a trade to even here. I came out of this trade at break even because that's what they were rejecting it on this. I think it was this day or this other day. Which day was it? I believe it was even this day here when I've tried to get in. Yeah. And then I came out of break even. As you saw, they started to pull it back, but then they did even buy it. But then it was the interest rates, fundamental news, boom, whacked it straight back down, broke the support level. So now, again, even now it's on this monthly support. This is what I'm looking for. So I'm looking for the market to go up. Let's just say it does something like this, and then I'm looking for a continuation like that, like a kind of W pattern. And my entry will be based on this. Now, again, this is not an exact level. This is what the market can do. But if it does do something, I will tell you this, guys and girls. Now, what pattern are we even seeing formed here? So we're seeing this right now. So even let me do this for you so you can see it better. We are seeing right now, if we do this, to make it better for y'all. Yeah, and I'll just continue this one from here. Up here, yeah. We're seeing a head and shoulders pattern form on a daily time frame. So if we see the market doing something like this and consolidates around this area here, right now, just move this here and call this a daily support level. Market, yeah, that's a daily resistance for now because the market broke that level. Now we could be seeing the market doing this here. So this is the left shoulder. This was the stop hunt to create the head. This is now the neckline, and then we could be finding a trade here straight away. So now we can start to see, and this is what I'm saying, why this didn't look like a strong enough buy, because I'm not seeing the market holding enough of a level around this point here. But if we see this, then the market comes back here. Now we know that we've got a pushback up into this level, which I would technically call a buy area here. This whole area above here is bullish momentum. I would call this a buy area, just so people can understand it better and they can see what I'm seeing in terms of my eyes. This is what I would say. There's bullish momentum here. You can see there's bullish momentum in this market. But what happened? Pay attention. They used news to break any type of idea of bullish momentum in this area. So if they pull it back into this area, yeah, and then go back down, what is John looking for? I'm looking for buys along this area because now the market's gone back into this momentum. Again, doesn't mean that they can't stop hunt me, psychology, but because I'm aware I can win and lose trades, the fact that I could be able to win a trade is me taking it here. There you go. And if I'm right, I'm right. If I'm wrong, I'm wrong. It's okay. I was break even here. This time I could be right, I could be wrong. Just depends. Just got to be willing to accept it. And that's what I'm looking on GU. So I'm looking at that type of idea. Literally, it's what happens. That's why I said from the most basic thing I said, just trade support and resistance. What happens with a lot of traders is they come into the game, they try and figure out a strategy. Then they realize the strategy doesn't work to them. Then they try and change the strategy. Yeah. But we're going to go further than that. But then when they start looking for new strategies, they start looking for all these things that they believe they were missing, words, phrases, abbreviations, all these types of things. Nope, not 3 touches. It could do anything it wants to do. It could do 1, 2, it could do 6 touches if it wants to. There's no, remember, there's no exact. You have to keep telling yourself there is no exact in Forex. One person's huge order knocks your exact out of the water. So what's the point? There is no exact. Literally, when it gets to the level, you enter. And I say the best thing I've said to people, if you want just a confirmation of it, try and look for an engulfing candle. So it shows off of this level that there was some type of bullish momentum. It's down to the trader what time frame you use. A good enough entry, I would say, is if you check a 4-hour engulfing candle off of that level or a large bullish candle off of that level. Some people might say I'm only going to trade it if I see a daily. Some people might say I'm going to trade it if I see a 1 hour. So that's down to the trader, and that's down to your data collection on what works for you. How can you use small risk or small account though? With volatility, how can you use small risk or small account? So when you've got to remember, when you have a small account, first and foremost, the problem with people with small accounts, yeah, there's another question that's been asked to me, is about how can you small risk with a small account? And realistically, this is the best way I'm going to put it to you, yeah. If you have a small account, first and foremost, you need to be trading for a longer period of time before you can expect to grow that account. A longer period of time is actually collecting data. It's not becoming a pro at trading. How long is that said person with a small account actually collected data for? Is it 1 or 2 months? Is it 3 months? Is it 2 years? Minimum I'll tell anyone to collect data for. On a set strategy, they do not change. I'm being honest with people, and I don't even really, it doesn't bother me if people think it's right or wrong. You need to be collecting data for at least a year. You need to see the market moving in its 4 phases. I've explained this to people already. There's 4 phases to the market. I've shown you in the previous Zoom, not the last week's Zoom, the Zoom before that. You can go into this at the beginning of the Zoom. It shows the 4 phases in the markets in the general group as well. So there's a consolidation. It's basically advancing, decline, accumulation, distribution. Yeah. So there's always 4 phases in the market. And from those 4 phases, yeah, your strategy is either going to win or it's going to lose, basically. That's what's going to happen. So I just thought I heard the noise. It's either going to win or it's going to lose, basically. And it depends on how you trade. Literally that fact. Yeah. So once you're trading like that, you're in a position. Sorry, people, just give me 1 second. A lot of noise happening in my background. Okay, I'm back with you. Sorry about all of that, people. Sorry. Apologies. Yeah. So again, there's 4 phases, and that's what you got to see what you're going to either be trading, and you've got to understand again that you'll be winning or losing during these 4 phases. Anyway, it just depends on which way you trade. I trade the advancing and the declining stage. So here, if the market gets into here, it would be in an advancing stage. If I'm correct, and it starts moving off, in theory, this is what would happen there. And it will be better for me. So if you're trying to grow a small account, you have to know a certain amount of knowledge. You see how I just explained that to you in the market. So once you know that, then now you're in a position where you can start to grow a small account, because you're going to be, realistically, if you're growing a small account, first and foremost, you need to be taking lower time frame trades. Yeah. So you need to be looking, remember, look at these zones that are marked out here. So of course, if it, was in different positions, it will be a support or resistance. So you can already see in the market here, this was coming into New York session here. The market had come to this level, but notice it didn't tap this level any amount of times here yet. It only tapped this level. Let's see, it broke back in, tapped this level once, tapped this level 1 more time, which was a daily support before it became a resistance. And then you would have been looking for a trade setup from this level here. So this is how you'd been able to take a trade. Again, it didn't matter if it was 3 taps or 2 taps, it went off. Regardless of what it is, it went off from that level. And this is when you would say to yourself, okay, here, short position, sorry, not short, long position. You put an entry in here, you put a tight stop loss in here. It depends on how big your account is. So let's say about 20 pips, and then you'd be looking for 40 pips or more. Of course, from that level to this level, it's a 4.7. So let's just say it's a 1 to 4. Once you can see how, because I'm aware of this level, yeah, remember, this is a level that I'm looking at in terms of the market as a buy zone, because I can see it's bought off of this level already. Remember, then you can say to yourself, okay, if it does buy there, this is what I'm going to do. But again, it could be win or lose. For anyone that was trying to swing trade this, they would have lost because they put the news in, whacked it, and broke that level. So that's how you would technically grow a small account. But again, remember, I'm not just trading on a small account because I'm not aware of the information that I know. I'm aware of the first and most important thing. Go to the higher time frames, monthly, weekly, daily, 4-hour, and draw your support and resistance. This is why you see in my charts like this all the time. I'm trying to tell people this all the time. Don't overcomplicate the fact of it. Just draw your support and resistance level. I do it from the body, the bodies of the candles, not the wicks. Yeah. And then once you've got that, then you can start to look for things. But again, you've got to realize that no matter where the market is, every time frame has those same 4 phases. You're going to win or lose trades based on whichever phase the market's in. So anybody that did try and catch, again, a sell off of here with a smaller account and trying to grow an account with small account, smaller risk, yeah, they might lose this trade. But now I'm going to win this trade, let's just say, because I've managed to catch my buy from here for the continuation of the buy. Do you get it? So now I'm winning because I'm in the advancing stage, but then someone else is losing because they're in the they're trying to trade one of the distribution or accumulation stages. Distribution accumulation is when the market's consolidating. So right now, this was if it was going to still continue pushing down, it was still a distribution, I believe. So yeah, so it's a smaller time frame distribution, boom, and then they've whacked it back down again. And this is what you see every time they consolidate. Here again, another distribution, whack, again, whack. So every single time they do that. So it's literally that situation. So hopefully that makes sense to you. That I know it's a bit long-winded and someone came to the someone came around, but hopefully that made sense to you there. Does that make sense, Tim?
Absolutely.
No problem at all. So yeah, this is what you're going to get sometimes, you know, when it comes to this game. This game is, it's not a game when you know, everything's going to be perfect for you. And I think the more and more people understand that, the better for them, you know. So let me just go here again. Get everyone in here. Okay.
Yeah, you simplified it to the easiest way, you know. All
So are
about
you trying
getting
to
the
ask a
highest
question?
probability.
Sorry?
I said you simplified it so much. Thanks.
No, okay, no, that's no problem, man. That's no problem at all. Sorry, let me just do this here. Just with, yeah, and it's something I explained in the VIP service when it comes to trading prop firms. Most specifically, again, you see what happens, yeah, with traders is it's a weird way to put it, because more than anything, it's everybody's expectations are too high when it comes to trading. You've got to lower your expectations. And please hear me right when I'm saying this. It doesn't mean you're not going to make huge money, but you got to understand, yeah, you're not going to make huge money every single time. You're just not. You're only going to make huge money in the market when the market is in a certain position. And you got to understand, when you make huge money that time in your strategy, it might take 4, 5, 6 months before the market gets into that sweet position and you just make mad money. I'll give you an example of sweet money that we managed to make. Now, if you go over to the Neo section, and you'll see on the Neo pip count section, in February, every single trade I was taking was winning when it was coming with a Neo level 3 setup. And when I'm saying winning, people, it wasn't winning by 10 or 20 pips. These trades were 1,000 pip trades. Do you get it? So now, being, let's say, in another 5 years of me trading at this consistency I'm doing now, yeah, now I'm able to have $500,000 account, yeah, at that same flurry comes through again. Now I'm able to make 1.7 million in February from trading. Do you get it? But then as soon after it came into March, trades were hit and miss now. You understand? So that would be a situation. So I'm going to go through the questions right now again, but that would have been a situation. So it doesn't mean I'm bad, but what happens is that I've got to understand that that was a good flurry of trading. So when it comes into prop firm accounts, even when you're going to win or pass these prop firm accounts, you have to be careful, because there's going to be good periods when you can trade them, and there's going to be bad periods, and it's all based on those same 4 factors. You might say, I'm going to pass this prop firm account this time, but you might be in a period where the market's not in one of your 4 phases. So guess what? You're not a bad trader. The market's not in your position. And these prop firms are aware of that. That's why they tell you, yeah, as long as you don't break any fundamental rules, yeah, you can reset your prop firm account from the start again. So let's say you don't pass phase 1 or phase 2, you can reset it for free. Basically, you don't pay again, because they're even aware that the market moves in phases. Even the prop firms are not expecting you to be a perfect trader. The only thing the prop firms care about is that you're not an emotional trader. Literally, that's it. As long as you can prove to them you're not an emotional trader, which people struggle with a lot, then you'll be fine. But if you get your psychology right to know that if I trade robotically with this risk, yeah, it's impossible for me to blow this account. Guess what, people? You've proven to them that you're not an emotional trader. And I guarantee you, if you trade that way continuously, one of these runs, this is how I teach people in the VIP, you will pass your prop firm challenge and get a live account. But you have to stick to the rules that you have for yourself. Do you get it? And one of them being the risk management. You can't start changing how you trade and your risk. It has to be consistent all the way through continuously. That's what happens. So, okay, let me answer some more questions so I don't go too far. How can you tell distribution versus accumulation phase? Often I think something is in distribution accumulation. So yeah, you won't be perfect. Again, you see what's happening here. Perfection. Too many people ask, how can you tell? How can I avoid? These are questions you've got to remove. You've got to remove them because the market doesn't care about all of that. Even if you're in your accumulation or your distribution phase, as you've seen here on the chart right here, there was an accumulation, and this was supposed to, let's say now, be an advancing stage. Look at the size of this candle. This is a 4-hour candle. Remember that. This is a huge candle. There's supposed to be an advancing stage. Even if we go to the daily chart, this is a huge candle, even on a daily chart. Yeah. But then one news event, and this was the interest rates. They said it's been the highest ever since like 2013. I was hearing on the news on the radio when I was driving. Yeah. And that's what the news that got released that just boom, pushed price all the way down. So it doesn't matter. Your job is not to find perfection. Your job is to organize your risk and realize that over a period of time, it won't matter. I will go up. Literally. That's your job. Yeah. Okay, let's go into this. Boom, 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 boom. Regardless of breakouts or reversals, continue. Regardless of breakouts, reversals, continuations. Yeah. Okay. So this war does not change basic market structure. Yeah. No, the war doesn't change market structure, but the war just means that the market doesn't have to continue the trades when they do them. AKA example of what I just showed you here. So here was basically a breakout. But then because of whatever they can use, they just reverse price and pushed it all the way down. Do you get it? So that's how it works. So I just want to see if there's anything else here. Cool. Yep. Okay, so has anyone else got any other questions before I move on? I'm going to move on. And again, you still be able to ask questions as I'm going through the Zoom. Don't worry. I'm very passionate sometimes, so don't think I'm being, hopefully not too abrupt or whatever word the word is for it. I'm just very passionate, and I'm really trying to stop people from losing unnecessary money, because people don't see how much people message me and how much money they lose sometimes, not from my trades, just from trading in general. So like if I have to be like, listen, so they don't lose money, it's what I got to do. Maybe some people are just too soft with the way they trade, they're teaching trading. But me, I'm like, listen, you've got to understand that, stop doing this to yourself. I'll say it straight to the point.
I've got one question, John, if you don't mind.
Yeah, there's no.
So say if the market is a higher time frame perspective, and we're looking at it, and it's like an accumulation or consolidation. Does that mean that the lower time frame for entry is going to probably be like in a range, or it's going to be like consolidating as well because of that higher time frame?
Yes, definitely. So, okay, I'll give you an example. It's literally what I showed in this point here. So let me just get this drawing off. Okay, it's done it. Thank you for removing the drawing. So exactly. So you can see on so when I go to those 4 patterns, okay, let me go into this Zoom here, because I want people to be able to watch this over the weekend. So it's not like I'm just talking. So I'm just going to stop the screen share. I'm going to get back the picture. Yeah. And then I'm going to show you what I mean. Yeah. By this. So just give me 1 second, people. So I'm going to put in the Discord. Did I pin it in here? Could have sworn I pinned it. Did I?
Thanks. Appreciate you.
No, it's okay, man. It's okay. It's like, this is why I said I'll just do a Zoom. I was just going to make a YouTube video, but I said, YouTube videos are good for people, but what I'm doing now is better, basically. Long story short, because it's actually, you know, answering people's questions and getting to something. So let me just get here. It's like 2 weeks ago, so I just have to go all the way back. And then I'll put the screen share back on in a second. Okay, here. All right, cool. So screen share is coming back on now. Share screen and then go back here. All right, cool. So you can see it here. It's here again. I'm going to open it wide so everyone can see it here. Yeah. And this is what I'm talking about. Yeah. This is literally, and don't worry about what it's saying all down here on the right end. Don't look into that as a gospel for anything. I'm not saying it doesn't work like that, but personally, you're still going to win and lose trades that way. So it's not a holy grail of trading. What is the main factor of all of this is what the market's actually doing. The market won't do nothing else apart from these 4 phases on any single time frame. But again, you're still going to win and lose trades based on any decision that they decide to make. And again, that's not with this moving average put there or anything. I'm talking about just the sheer market structure that you see here: accumulation, advancing, distribution, declining. Yeah. So what your question was is that, okay, if you do see, you know, accumulation or distribution on a higher time frame, on a lower time frame, what does that basically mean for you? Now, what that means for you is this is mean reversion trading. If you do see that, this is when, yeah, we go here. So 1 hour time frame is probably about good for you to see. Even now, you can see at this point here, this is when traders that trade mean reversion would be making money. So the market's come here, it's broke back out here. They might be waiting for a breakout on this level. Let's say they've seen this to be a bit more clear. Let's zoom in. We can see the chart better. And this is where a breakout trader would have made money. They would have had their stop loss 1 bar, which is below this big breakout bar here, or below the support resistance level. So let's just say the most basic way. And they would have been looking for most likely a trade to at least about here. As we can see, this was the breakout zone. So therefore, they were able to catch here a trade that was at least a 2.9. So let's say it was about a 3 risk to reward ratio. Then what this person's done again, not this one. Let's go to this. So remember, when it gets up there, they'd have been looking for a reversal off of this level here. Didn't touch this level, didn't touch this level. Now they would have got in here. They've seen a breakout back in to this level, and they would have traded here. So on a higher time frame, because you're seeing a consolidation, and this is how they would have won. So they would have won this trade, and then they would have won this trade here. This is literally what they're doing. And I say that in my mean reversion video. If you go to my YouTube, yeah, you'll see that there's a video on mean reversion. It's literally about 5 or 6 videos ago. It literally says mean reversion on the thumbnail, so you can't miss it. And this is how they're making money. And this is how, again, even if you've got a smaller account, this is how you make money. So if you've got a smaller account and you can't take as much risk as well, this is how you can make money if you want to try and get in and out of the market. But most importantly, what people have to pay attention to here, which again, traders struggle with, is there is not a trade every single day. And this is how you can see there's not a trade every single day, because you're only trading when the market was on this level, and you're only traded when the market was on this level here. So any other days in between, guess what? You don't have to look at the market. You can even set alerts on these levels that you have marked up. It's really that simple. So let's go to here.
That's my question. Thank you so much. Appreciate that.
Come on, man. It's no problem at all. Hopefully it makes you something, man. Even if it makes you 10 winning
Absolutely.
trades.
That just like boxed it up right there. All you did was box it right up. And that's what I was wondering, because sometimes you look at the higher time frame and you're like, all right, well, it's accumulating here, but what is it doing on the lower time frame? And now it makes sense.
Yeah.
See it right there.
Yeah, literally.
So thanks again, John.
Yeah, no, that's cool, man. That's cool. That's literally what it's doing on the lower time frame once it's accumulating or distributing on the higher time frame, basically. And for me, that's just not how I trade. But if I was to scalp, that's how I could trade if I wanted to. But even if I scalp, I'll probably still just scalp my breakouts because I'm aware of what they do. I've collected all my data on them. It's not an issue. So it's down to you as a trader what you want to do. But again, this is how lower time frame traders are catching trades, literally like that. But if they're not going up the higher time frame, they're not seeing the box in the correct place, basically. And that's what's making them just lose trades they don't need to lose. That's how it's not avoid, but yeah, you get it. So it's that point. Okay.
I prefer just to find the trending there and just go with that. You know.
Literally. So now I guess so I'm just reading out some more questions for people on YouTube because you won't be able to see the question box, so I'm kind of reading them out aloud and then answering them. I guess I meant regardless of what type of strategy you employ. Yeah, it's about levels. Yes, more than anything, it's about levels. This is why every single YouTube video I've been doing lately, all of my Zooms, I've got these levels on there. I'm trying to show people how important and how simple trading actually is if you just draw your levels. Don't let anybody tell you support and resistance isn't real. I tell you that for a fact. I've got more than enough data, screenshots, and trades I've given out that it is real and you can find long-term consistency over it. It's not the levels that's a problem, it's your psychology and your risk management. That is your problem. Literally, again, that is literally your problem. If you're losing trades still, it's not the levels. People will trade awkwardly, is the best way for me to put it, and then say, oh, support and resistance is not real. The market does what it wants to do. And no, support and resistance is real because support and resistance is levels they have either stopped or continued the market at. Why did they stop or continue the market there? They had reasons because they put in probably orders. Maybe it had to reach, whole numbers, as people like to say they trade, all these types of things. Those reasons why it went there. It was not no reason. You understand? So that's why if there was a reason for something to happen there, then guess what? There's a reason something else can happen there in future. So that's why support and resistance is actually a very good thing. It's your risk and psychology you have to just understand when you do trade support and resistance. That's what you got to sort out. If you're obviously a losing trader still, if you're trading that. How do you decide stop levels? Stop levels based on what you want to do with your risk management, and that's your data collection. So this is what data collection is separate from the thing. So the fundamental things is risk, psychology, strategy. That's the way I'd even put it: psychology first, risk, then strategy. Why psychology? Because you got to understand what trading is first and foremost. Like I told you, long story short, you'll win or lose trades. Risk management, you have to say to yourself, okay, but you have to work risk management out on data. Data will show you that, and that's what I'll show you now. So, and then obviously strategy is next. Strategy is what I'm showing you here already. So this is mean reversion strategy. So you buy and sell for highs and lows, yeah, literally. And then when you go into your risk management, you need to be in a position where you're like, okay, every time I take one of these trades, I'm only going to take an accumulation setup when the risk management, based on your maths, is 1 to 2, 1 to 3, 1 to 4, 1 to 5. Why I do this is because I realized that every single time I've gone to a higher time frame, let's just say now, as we were talking about that recently, this is how you would your mind can click into something. Every time I go to a higher time frame, yeah, and I see an accumulation on a built-up period, even when I'm back testing, yeah, I've realized that those trades from the support and resistance level bought 1 to 2, 1 to 3, 1 to 4, on average 5 times. It does that when it's in that accumulation box before one big breakout happens, basically, yeah? Or maybe it does it only 2 times. So now you know, based on the fact of how much on average from a higher time frame, yeah, this was 2 times here. Let's see the previous one here. We had 1 tap here. Let's see. So there was a level, let's say here and here. So it was 1 tap. It never realistically got back to this level up here. So there was only 1 tap on this time. So this was 1. This was 2 taps off this level. But to be fair, let's go back a bit more. No, nothing there. Let's see if we see anything else. I'm just trying to see if I can make sense of it all for you. So you need to, obviously I can't see it from this time frame. You need to go to a higher time frame and you need to find these accumulations and distributions. So, and when you find out, just so I don't go into it for too long, when you find out on any accumulation or distribution, you need to figure out how many times was a trade setup appearing in that point. If you see, and how far did they go, basically. Or if on average they go 1 to 2, 1 to 3, 1 to 4, maybe every single time there was something like that, it does it 3, 4, 5, 6 times. Like I said, this was 2 times. Then you could say to yourself, okay, my risk to reward needs to be X amount. Do you get where I'm coming from? So once you do that, then you're going to be able to say, okay, I know that even if it does this, let's say every single time one of these boxes form, if it does it at least once out of 5 times, out of 4 times, out of 3 times, I'm going to be either break even or profitable. That's all you've got to sort out. That's how you work out your risk management. Your risk management, and so your stop loss needs to be based on the fact of how much you can lose, but based on the fact of your strategy showing you how on average consistent your pair is. It might go out of sync sometimes. Yes, it might not work. It's cool. But then if on average over a longer period, this is now when we go into a longer period of time, yeah, it's once the next setup comes up where the accumulation distribution happens, you win 4 trades in a row this time. So even that last time when you lost and you lost money completely, it didn't eventually turn around for you in terms of your 1-to-4 ratio. You lost 4 times in a row, but the next time, yeah, you was able to win at least a 4. So you lost. Remember, your risk management is always going to be 1. So you'd have to lose 4 trades for it to be a 4 losing spree. But then the next trade in the next accumulation distribution, you won 1-to-4 trade with the same leverage, same risk. You're back at break even. Does that make sense to you? So that is how you work out your stop loss. You just have to work out on average. For me, what I use for my stop losses, I use my ADRs. That's what I use for stop losses. Now, but I can use that because of the way I trade. I wouldn't use an ADR if I traded mean reversion. Do you understand? But because I trade breakouts, I trade ADR, which is the average daily range of a pair. So I know that on average, if a pair is going one in one direction, it can move an average daily range amount in one direction, or it can move more. Do you understand that? So I can do that coupled with market structure. And some people use the ATR. I don't use the ATR. I'm not entirely familiar with the ATR. I understand the average true range, but I don't use it. Do you get it? So you've got to figure out your way of how you want to assess it. But like I said, if you trade this is the most common way people trade scalping. You want to look for, on average, when you do scalp, and every time it comes into your area, again, how many times do you have a winning trade in there on average? Is it 3 times? Is it 4 times? And that will let you know how much your risk should be. So your stop loss needs to be a certain thing, and then your take profit has to be a certain. So you know that even if you do lose it 4 times in a row, by the next time it appears and you do win 1-to-4 trade, you're back at break even. Then if you win the next trade, you're 4 places forward. I hope that all makes sense. Bit of a mouthful, but I hope it makes sense. I hope it makes sense. Just let me know if it made sense to you. You can just put a yes or no in the messages. So I'm going to go into the next pair. Cool. So if it's kind of, let me know where the issue was with what I was saying there. So maybe I can elaborate it, because remember, you might not be the only person that watches this back that doesn't understand it. And we're here to learn. It's Saturday. We're here to learn, man. So please let me, elaborate. Let me go even further if I have to. So I can get so whilst you're thinking of that, or what part you're going to make your question, I'm just going to go over USD Jpy. So we still do have analysis in here as well as learning. USD Jpy has just gone into a madness, right? It's gone into madness. I'm actually in this cell right here. I gave it to the VIPs as well. I could be wrong. I was hoping for it to break out with NFP personally. Hopefully they've met their quota with NFP, so they've hit their targets, they've done what they need to do, and they will just melt price. But at the same time, if they don't respect this daily resistance, then it's going to go up to probably this weekly resistance or monthly, and it won't just sell just yet. But if they do respect this level, literally, I'm looking at them hopefully holding this level here. If they do respect this area, then we could be looking at a continuation to a pull down on these pairs, like we saw Gbp Jpy start to sell, and some of the other JPYs have started to sell as well now. So if they do, then we are looking at some type of trade like this. If you do miss this trade from here, and you want to, or if you want to wait a little bit more, then you wait for it to break out, you wait for it to retest something like this, and then you look for your entry here, around about here. And in all theory, we're on a daily chart, so technically this would be a neckline right here. And we can see this is possibly a neckline, because look at the chart here, right over this section here. So you'd wait for it to touch this level again. Look how it sold off of there, but it was a fake sell. So the time it comes to this level again, this time might even pull through and then pull back in the same day like gold did. And then you look for your continuation of your sell from here. If you want to be a bit more safer, you can do that. Completely up to you as a trader, how you decide to take the trade. Of course, I've been in different trades, taking different trades, aware of setup. So if I'm wrong here, I'll look probably for another setup here. That's what I'll do. Okay, so let's go back into this. Yeah, so this is the head and shoulders, by the way. So it would be forming the head and shoulders if it does do that. I guess it's about making sure on back testing, you'll see you'll win more than you lose than using a calculator total pips of potential. Actually risk if you have Yeah, literally, that's what it is. And that's why I said risk management is more important than strategy. That's why I put strategy last out of those three. I'll say psychology is because people's expectations of Forex is completely wrong at first, because the majority of people come into Forex because they're trying to find, ways how to make money online, literally. And then, funny enough, they come on to how to make money online. And the first people they see are people that have made 10,000, 30,000. It's hardly anybody's coming to Forex and seeing the first person making money is like some normal, consistent trader that might make 50 to 100K a year, and they're making only, maybe they're banking like 1,500 a month, 2,000 a month, you know what I mean? Just realistic numbers in terms of like work money to Forex money. They don't see that basically when it's how to make money online, just so they don't have to go to a 9 to 5 actually out there all the time. They can make the same money at home. They're always seeing people making extremely high numbers. So psychology is already, look at what I just said, that your psychology is already just out of whack, because you're just thinking straight away, even though you're such a humble person, it doesn't matter. Once they throw that 50K in your face, you've already been monetized. Like your eyes just seeing that, you're drawn to it. And now you're thinking, okay, there's a possibility of making 50K. So now you're already getting excited without you thinking you're getting excited. So yeah, that's one of the things. If you have 500, you can say risk 5 pips. Yeah, I wouldn't risk 5 pips. I would lower my leverage entirely and risk more pips, basically. That's what I would try and do. I wouldn't try and risk 5 pips. You can risk 5 pips if you're trying to do like a 1 to 5 trading, 1 to 6, 1 to 7, because then you could be wrong X amount of times. But when you're right, obviously it's going to give you a 5 risk to reward. So if your risk to reward is higher, you can have 5 pips. But now if you're going to risk 1%, then it's pointless. You're better off trying to grow that account with just a bit of a bigger stop loss, because you'll get stopped out too many times, I think. It's not worth it. I think really on average, you want to be risking between a 1 to 2 and a 1 to 4. Of course, you can still do 1-to-1 trades. It doesn't even matter. Like, of course, if you lose, it causes an issue. But if you're a good enough trader, you're all right. But for a beginner trader, I would say you want to be around, you want to definitely be on 1 to 2. And then you want to be, if you're on 1 to 4, you've got 3 chances of losing any trade you take. But 5 pips, yeah, you could easily get stopped out of the market. Remember, once you start to tie your stop losses, you're basically telling yourself, you're right. And you don't know you're right, because the market can do whatever it likes. The market it's not our friend. we might make money from it, but it's not a friend. So you can't tell the market that I know I'm right. Do you understand? There's no point doing that to yourself. Over the period of time, it will affect your psychology again. So to make you feel like you're invincible in the market. And that's the whole point of your stop loss being at a certain area. I think the most realistic thing is putting stop loss at structure, because once structure, like you even said yourself before, when structure is held, the market should go the right way. It shouldn't go the wrong way, literally. And I've shown my students that many times in the last couple of weeks, that once the market breaks structure and continues to go, breaks structure and doesn't go back through that same structure, it shouldn't basically go through back the wrong way. It should only continue to go the right way. Yeah, that's what you do. You adjust your leverage and keep your risk, basically. That's what you do. So your leverage can change, but you should always risk the same amount. So you can risk. That's why I said, so if you're risking, let's say you're risking 20 pips, basically between 20 and 10 and 20 pips. Yeah, if you're lower time frame scalping, you always just you can up your leverage over a period of time, but you can only up your leverage once your account growth is gone. What people try and do is they try and up their leverage per trade, rather than keeping their leverage the same for like a whole month, yeah, and then changing their leverage the next month once they've made a certain amount of percentage. They don't do that. A lot of people try and up their leverage per trade, and if you're doing that, of course you can do that for compound growth, strategies. But doing that, you're putting yourself in a position. You got to remember, if you're trading 1 to 4, but your leverage is different each trade, you're going to put yourself in a position where you're not letting your account grow. Yeah, you have to be strict. So you got to set yourself up rules and see how it works for you. There's no perfection, but if you literally keep 1 to 4 leverage, always trade at 0.01, let's just say, I guarantee you $500, 1 to 2 or 1 to 4 leverage, take the same type of trade setup you're even taking to today, take 30 trades like that, or 20 trades for the course of the month, however, maybe 15 appear, whatever appears for you. I guarantee you do that for 3 months, and you'll most likely still even be a profitable trader. Remember, there's only a 50% chance of win or lose in Forex. There's nothing else. Literally, it's literally like heads and tails. So yeah, so this is what I'm expecting on USD JPY. I'm expecting the market to hopefully hold this daily resistance level. I'm in from here already, just to let everybody know. If I'm wrong, I'll close my trade, maybe take a little partial loss on this. If not, I'll hold it to see if it's going to break this level. If it breaks this, if it's breaking this level, then I'll just leave it as that. And then I'll wait for a breakout and a retest, if anything, for a continuation of a sell. Yeah, 20 pips is cool. 20 pips is cool. 20 pips is cool, especially if it's 20 pips to a support and resistance level above or below your trade. Basically, that's cool. I couldn't tell you 20 pips is the best thing in terms of what the market can do. It's based on structure. This is what everything I'm showing you here is structure. So that's why I said it was 20 pips to the next support resistance level above or below your trade. Yeah. Don't you mean your risk size, i.e. if you're leverage AJ. Yeah, so you can call it either. I get what you're saying in terms of that. So you can say your leverage is your 1 to 100, 1 to 500, 1 to 300, etc. I get that point there. But in theory, yes, your risk that you can put into the trade is 0.01 or 0.02 or 0.03. You can put it that way if you want to put the terminologies in the correct order. Yes, that's correct. So what you do is you up your, to make it even easier for the most basic people, rather than just using the terminologies, keep your lot size you input the same, yeah, and trade that over a period of time. Once you've made money, then you can increase your lot size. I don't know, because I don't trade the ATR on a daily, so I'm not going to tell you that for sure. I'm not going to answer that question. I don't want to give you wrong information, as there's many different ways. Some people use ATR, some people use Fibonacci's, some people use this. So I don't actually trade an ATR, but I kid you not, people, market structure is your best thing. You see what we're doing to ourselves when we say 20 pips, 30 pips, even ATR, even me with an ADR, yeah, you're telling yourself that it shouldn't go that far. But when the market holds structure, if you're in the right trade, like really in the right trade, it will never break back through that structure. So if you're in the wrong trade, then it will, and that's what happens to you. So you just have to pay attention to that more than anything. Pay attention to market structure. I'm telling you, trust me. You'll see any trade that's your winning trade, I guarantee you that there was a chance, the majority of them didn't break back through market structure. As soon as it went off, so a support resistance level, never came back to that level. So the majority of them never come back to that level. There's only the odd few that might. And this is how people have those 5 pip stop losses. Do you get it? Because they're just literally putting themselves in a position where they're like, it should never come back here, literally. So you can do that. When you're putting a certain range, you're saying that it shouldn't, but you're still, that's when people start having this thing where they put a stop loss and then it starts pulling back and they're like, let me move my stop loss 25 pips. Let me move it 30 pips. And before you know it, you've moved that stop loss 100 pips and you're, 1,000 negative. Sorry, I don't understand the question you mean by market cycle. I know the market can move in cycle, which is phases basically, but what do you mean cycle? You said you mean market cycle. So let's go into the next trade now. USD CHF, another pair here. So we do have this on USD CHF. Let's go to the daily. Are we on the daily? No. Yeah, but basically, yeah. So if you're in the right strategy for the right phases, then yeah, you should be fine. But like I said, again, there's no way of you having a perfection of which phase is what. You just have to, that's why we have risk management. You got to remember, the whole reason we have risk management is because we already are telling ourselves there's no perfection in the market. So you just be aware. Remember, the psychology is to let you be aware of your surroundings. That's what psychology is. So you're aware that you can win or lose. You're aware that the market goes in phases. You're aware that there's support and resistance. You're aware. That's really what psychology is. It's a knowing of things. You're aware. And then risk management is now saying, okay, that's why I said psychology first, and then you put a risk on the fact of all that psychology information, the psychology of trading, you put a risk on that, and then you have your, but your strat, you put a risk on your strategy, which is third. So literally, that's what your psychology is. It's just having an understanding of everything. So USD CHF right now it's on this resistance level here. So, you know, for the more hungrier trader, they might just come in straight away and trade this one here, but it would be better to go down to a lower time frame and see some type of rejection. We're not seeing no type of rejection of this level. We are seeing a possible consolidation here, but it would be better for you to see either a rejection, or if you want to, you just want to, it's completely up to the people. You see this level, you can just trade. It's how much your risk to reward is. So let's just say you was a mean reversion trader. Now this is when you can give yourself an idea of a type of stop loss, because we can't see no immediate market structure here. There probably is all the way over to the left. You could check as well, but you could literally do this. So what we're looking for, so now you could do this for yourself. So remember I said 1 to 4, but ideally we can see market structures here, 1 to 2, and then you got 1 to 8. So now if you're trying to always take to catch this winning trade, if you're always trying to take a 1 to 8, you can take this trade like this. If not, and you're trying to catch a 1 to 2, you take this trade like this basically, and you just enter. You just enter. As soon as the market spread comes down, you just enter. If you're wrong, you're wrong. But guess what? Let's say it goes to another level. Let's just say it even goes to this level here, and then you do the same thing there. But this time you're right. Now you're winning. That's literally how it works. That's what people are not doing. What people are trying to do is they're trying to find every reason to why it should reject off of this level, why it should trade off of this level, why it should do this. And the simplicity of Forex is literally whenever price gets to a level, obviously a key level, major level. So you might say, I'm only going to do daily, monthly, weekly. Yeah. Then you just take a trade. So if there's a monthly level, you just enter the trade there, see what happens, wait for it to get to another level, enter the trade. That's what you do. And like I said, the more risk you have, yeah, the more risk you can put. So you've got this. So let's get this. Not there. Yeah. So the more this you have, so that was right. So if you've got this going forward, so you've got 6 or 8, let's say you got like 8, now you've got 7 times you can literally enter a trade here, enter a trade here, enter wherever. You could do that 7 times before you're right, basically. What people have a problem with is, again, seeing the consistent losers. They feel like they're not trading correctly, but they don't realize that as long as you get 1 trade out of those 8 right, you're good. That's what trading is. It's all based on probabilities. Literally based on that. So yeah, for USD CHF is either you enter straight away from here. If not, me, like I said, what I usually do is I wait for the break and the retest. I wait for it to break out, retest, and then catch a level somewhere, depending on how the market forms. But right now, I still would be waiting on this pair to do something. That's what I do. It's based on what I do. Basically, huge winners, yeah. And that's what happens. And those people, they have a small win rate. I told you, I've managed to get to phase 1 on an account with 20% win rate. It was between 20 and 30. I can't remember, I think it was like 24 point something. And that's on a proper account. That's just me taking loads of different trades. I'm taking all types of trades. This is not even my specific trades only. If I took my specific trades only, my win rate would be a lot higher. I'm taking scalp trades. I'm taking this ones, whatever. I just want to try and see which way you can play with a prop account right now. This is what I'm trying to do with these new prop accounts. I'm literally trying to see, I'm testing all of this risk. And even with that, by the time I had 1 winner, yeah, and that's what happened. I caught EJ. I had 1 winner, yeah, and it just, boom, that pushed my account mad percentage forward out of loads of different trades. You get it? So that's just literally, and that's just, you put that like that, that's just probabilities. Sorry, what do you mean by 24K, by the way? So yeah, this is what we're looking at on USD CHF. We're looking at the market going to either reject off of this daily resistance, or it's going to push up to the next level. If it does start to form new market structure, then we draw new levels. If not, we're looking at the market breaking down, and then most likely probably finding some type of resistance on like this 4-hour support here, and finding a continuation of a sell, or it could go down to different levels. But of course, this, you've got to just keep drawing your support and resistance levels as the market's moving, if you are paying attention to USD CHF. But I'm looking for sells on USD CHF if I'm trading it. I don't actually trade this pair, to be fair, but of course, because I don't trade it doesn't mean nobody else can't trade it. So if you are going to trade it, I'd be looking for sells on this pair sometime soon. But obviously, either in a break or retest or a or a straight rejection off of one of these resistance levels here marked up, so you can see all the levels over here on the right. Okay, right. It depends on what prop firm account you're on. My Forex funds has a 6% drawdown, 12% overall drawdown, I believe so. And FTMO has a 5% and a 10% overall. So 5% daily, 10% overall. And remember, that's if you're trying to risk it. What you're not supposed to do is risk all of your money in one trade. That's what a lot of people keep trying to do. That's how I see how they're losing. Or what they're doing is that they're not calculating their trades to say, if I take this amount of trades over a period of a week, how much I will be if all of them were to hit stop loss. I break all of this down for people in the VIP service as well. So anybody, if you're interested in that, you can hit me up. It's a paid service, but of course, like I said, I'm very attentive. Even today, I came in, started breaking more information about fundamentals down to traders. This is Saturday, market's not even open. So I'm very attentive to people. So you want to break down your account, your prop firm accounts into probabilities. Too many people are trying to take these risk accounts. And again, it's that whole idea of seeing someone, you don't have to pass this account in 3 days. You've got 20 trade days to pass it in. So you should be trading your risk based on your 20 trade days. Too many people are trying to, you know, pass in the first week and then pass the next one. And so they just want to get to that money. And you can't do that. Don't do that to yourself. It's not you can't, you can pass very quickly if you're lucky. But again, remember, the market, it has good phases and has bad phases depending on your strategy. So why make sure you give yourself the chance to see. We can't see if it's going to be a good or a bad phase next month for the next 20 days on this prop account. So trade over the period of the 20 days. Don't trade for the period of 7 days, basically. What's that? Start on. Do you like to see a close in the position direction to confirm? Sure. Yeah, definitely always see a close of a candle, whether you're using a 15-minute, 1 hour, 5-minute, whatever time frame you're using, always wait for a candle to close. That is definitely a key rule. Trust me, I'm a victim of that so many times. I don't wait for the candle to close. Being everything I know in my head and how I can trade, I won't wait sometimes. I'll be like, oh, let me just enter. And I kid you not, that candle can just suck itself all the way back in and go the other way. It will be like a massive engulfing candle, and it just engulfs the body the wrong way. It goes the opposite way. I've seen it happen many times before. So be very careful. Wait for the close, because the close is telling you it was a certified decision that was made on that candle, basically. And that's what you can work on. Now you can work on something you can see. That's USD CHF. AUD USD. What do we have here? AUD USD. We're seeing nice. What are we seeing? Yeah, so we're seeing a weekly support here. I don't think there's another daily. Sorry, we're seeing a monthly support there. Let's draw this one just in case. Boom, boom, boom. So here, another level. Where is it? No, I don't want to do that. Showing it. That's it. I'm not coming up with it. Take this here. I've got another level of support there. So this is, I can even just call this a daily level. Let's go to the monthly time frame, actually. Make it better. Okay, so we can't see anything there. Let's go to the weekly. Okay, yeah, down there, but that's better. So there's a daily level here, and then we can see there's a weekly level down here. But for now, let's keep this daily level and see how the market behaves. So I'm looking for buys on AUD USD. As we can see, this is a buy area here. Even try to buy. This is exactly what I was talking about when I'm saying this. Look at this. So imagine you didn't wait for this candle to close and you're like, nah, it's a buy, and you entered. So they bought up in this same week and they sold down in the same week, the whole candle. This whole candle reached this level here and they brought it all the way back down in the same week. So this is why you got to wait for a candle close. This is just a weekly perspective. So right now we're looking at price, most likely, if it holds this level here, we're looking for another breakout and a retest. And what makes it great is that there's a liquidity grab on AUD USD right over here. So if it does buy, it's got a perfect reason to now buy on a lower time frame, and you're going to see it. If it is buying, you're going to start seeing it moving fast to go cover this weekly liquidity they're left with NFP week. So I'm looking for buys on AU, and out of all the USDs, this is a better pair to look for a buy, because it's got this huge liquidity to cover. So you know, at least if it is going to buy, it can buy about 180 pips up, basically. I'm just going through some more questions. Again, people on YouTube might not be able to see these questions, so I'm just trying to go through them. So we start from here. The prop fund funding amount they start you on. Do you like to see it goes? Okay. Close. Yeah, you want to see basically a close above a level without wick. Sure. No, so you don't want to worry too much about the wick when it closes and closes above or below. You just want to see a close of a candle, a strong candle in your direction, because liquidity is going to get left behind wherever all the time. So you can't worry about them not grabbing liquidity. They are always grabbing liquidity. The only reason the chart moves is because they're grabbing liquidity in some direction somewhere. So it's pointless to worry about all of them. But what is something like what I'm showing you on this chart over here, which is apparent. So if you're looking for a continuation of a sell, you're in a position here. So I wouldn't look to continue selling AUD USD because of this liquidity here. This is when you have to start paying attention to liquidity a lot more, especially when it's right. So the next week it opens, it's basically telling you like there's a whole, imagine this is a massive tower full of money. Literally, this wick is a massive tower full of money that, you know, everyone can literally just grab. They can just grab with their hands. That's the best way to put it. And then you're thinking, I don't worry about that. I'm gonna go down the street because you're looking for a sell. I'm gonna go down the street and try and grab some money over there. But there's a massive tower of money right beside you. This is basically what it is. So that's how you pay attention to liquidity. You need to see what is right beside you and what you can grab rather than trying to move away and then try and grab something. So that's a more of an understanding of liquidity. Yeah. Is there any issues with trading, reversals, continuations, or breakouts? Would you wait for a green close with no wick? So no, so there is no issues with trading anyway. You can trade absolutely any way you want to. Remember, it's not really your strategy that's an issue. What people need to work on, remember, everything I say is it's like repetitive. I'm like a broken record. You need to work on your psychology and you need to work on your risk management. Too many people spend too much time trying to work on strategy, and that's what causes them an issue. You don't need to worry about your strategy. Your strategy is not the issue, because remember, there's only a 50-50. As long as you remember this point, let me draw this on the chart here so people can understand, and bear in mind for my brothers, there's only a 50-50 chance, yeah, 50-50 of you winning. This is my Picasso. There's only a 50-50% chance of any strategy you trade, yeah, winning or losing, literally. You've got to remember that, because the market can only buy, it can only sell. So you can only win or lose. There's no other methods. You can break even on trades, but it's literally 50-50. Do you understand what I'm saying? If you put it that way. So it's not your strategy. And that's what people don't realize when they switch on to Forex straight away. I didn't as well. I'm not saying I'm some perfect trader. I'm not. I didn't realize that. It took me almost a year to realize that, if not longer. That it's only a 50-50 chance. So it doesn't matter. It's not your strategy. What your issue is your risk management of this 50-50 chance. Is what makes you more into the winning realm than the losing realm, basically. And then once you have your psychology, understanding that your risk management will get you into the losing realm. Okay, how do I perfect my risk management? For me to perfect my risk management, I need to understand that I have more probabilities of being able to get a higher chance of these this win rate, basically leaning towards more of a 50. That's what it is. What about the wick by the monthly resistance level? So you don't have to worry about that, because a lot of times when I mention liquidity, people always look at the liquidity all the way in the distance and right at the bottom. And it happened to me at first, but you got to remember, it takes ages for price to get to those liquidity. As the market is buying more, yes, we've got more liquidity here and we've got some more liquidity up here. Of course, we can understand that and we can appreciate that if they are going to continue to buy, then we've got reasons for them to buy higher once they do. But right now, that's not our concern. That's a tower you're looking at all the way in another country right now, basically. Do you understand? The tower of money. You don't want to look at that one there. Remember what I said, this is the tower of money right beside your face. It's there screaming money, money, money. So you want to basically be looking for that. And this could be on any time frame. It just so happens that on the weekly time frame, it's a liquidity wick, basically. So you need to be looking at the most apparent one right beside you. Okay, so let's see what Tim said. So anyone with good risk management cannot lose more than 50, move more than 50% of their trades. So no, you can still lose more than 50% of your trades, but what it can be is that, remember, because it's like, how to explain, it's like it doesn't make sense, but it does make sense. Yeah, you can lose more than 50% of your trades, but because your win rate is lower than 50, that's what I'm saying, but you can still make money in Forex. It's because of the amount you're always risking one, but making more. That's the best way for me to put it. Do you get it? So once you realize that if I take 10 trades based on the amount, the problem people have is working out their strategy to the risk, like what you said, where do I put my stop loss? Remember what I explained to you, it's your strategy to your risk. Once you find a nice balance and equilibrium, a nice middle ground of between your strategy and the amount you risk every trade, and what makes sense for you when you do your data collection and your back testing, that's how automatically you'll become profitable. And again, that's what I said. People don't realize, but just trading off for support and resistance alone as a simple method, that alone can most likely make you profitable. But again, people are coming into trading for the wrong reasons. They're trying to quit their 9 to 5, expecting to get paid every single day. But you got to understand, if your setup doesn't appear every day, that means you're not getting paid every day. Make sense? You understand? So now you're in a position where you don't go to work and then not get paid for 3 days. So when you come to Forex and lose 3 trades in a row, all hell breaks loose in terms of your psychology. But if you were just to trade that same set thing and you're realizing that as long as I keep doing this, a 1 to 2, 1 to 3, 1 to 4 risk to reward ratio, in 50 trades, I'm going to make money because 30 out of those 50 trades are going to go 1 to 3. Do you get it? So whatever it is, so once it starts getting into that point, now you might have a lower win rate, but then you've got, because you're basically gaining more every time you do win, you're making money. It's basically that. That's all it is. Control your losses. That's the best. What you just put there, yeah, is Tim Palmer. I want everyone to know it because again, they won't be able to see it. Tim Palmer, and I appreciate him because this Zoom would be boring without Tim Palmer. And what I mean by boring is there would be no engaging questions in that sense. And that's not disrespecting to anybody else asking me questions, but Tim has been asking me the majority of the questions today, and they're questions that people need to know because it could be reasons why, a lot of reasons why people are losing trades. Do you understand? And the whole point of it is, the best thing I've said, he said here, is control your losses. That is what Forex is. First, you need to understand how to control your losses based on your strategy. And that doesn't mean finding a perfect strategy. That means finding the best risk for your strategy, risk management. So what RR are you taking? 1 to 2, 1 to 3, 1 to 4. Once you work that out, just keep trading and you will just see blues eventually. You might see 6 reds, but then you'll see 2 blues, and it doesn't matter about those 6 reds, literally. Understand market structure. Everybody understands market structure because the most basic thing people learn in trading is support and resistance. It's the first thing probably people learn in terms of strategy, support and resistance. So you will understand market structure. That's literally it. It's about averages. This is why you see I don't post trades every single day in the general group, because people are expecting me to be finding them trades all over the place every single day, every single time. What I do look for is the best trades to come off of market structure levels. And then I'm like, hey guys, here's a trade. You understand what I'm saying? I'm like, hey guys, here's a possible trade. But again, if it's that person's only joined me in that 1 week or that day, or doesn't take the 6 trades that I've given out, then guess what happens? They take that 1 trade, it's a loser. They take the next trade, it's a loser. All of a sudden, John doesn't know what he's talking about. Do you get it? When they're not realizing you need to take 20 trades that John gives out, and then are you making money or you not, or you break even. Even if you're still losing, okay, now you start to assess, was there something more than that? So for a lot of the VIP students now, I'm explaining to them, and anyone can quote me here that's a VIP student, I'm telling them you need to be a dynamic trader, because right now the market is very fundamentally driven. So no matter what you're trading, you need to be aware of your fundamentals because it will finish you. And this is a funny thing. Look at this. This is what I was teaching the students today. I'll show everybody here. This will make you laugh when you see this, yeah? Settings. And then here's what everyone can do. You can backtest this if you want to. It's nothing hidden. So you go to your economic events on your settings, yeah? Make sure you switch that on and then go tick off only see future events, yeah? I'm going to go into more. And then now look at this. Look how much fundamentals affects your market in one, just overall. This is all the news events that was released on AED USD for years. Look how far back it goes. So now when I'm telling you, so usually I'll just be a technical trader, but now when we're in these extreme conditions, which is possible talks of war, Corona before, now look how much possibilities, all these lines are news events. Yeah, obviously not all of them are high impact, some are low, some are medium, some are high, depending on obviously what was released at the time. All of these are possibilities of any set trade you're taking, winning or losing. Even though there's a 50-50% chance, now your percentage probably starts to go up or down depending on whatever fundamental news is being released at any one of these times. That's fundamentals for you right there. Literally, when I saw this, I was like, wow, this is how much your trade can be affected. You get it? So for instance, the one fundamental news release that was here affected price to reverse and sell. This was February, probably. No, this was even April, actually. Yeah, it was April right there. So let's see. So right there, the financial stability review, balance of trade, one of the most important news events. I've given a list of all the important news events the students need to pay attention to, because those will they will literally make your trade win or lose. Yeah, based on how we trade in the VIP section. You can see straight away that now, look at this. So it was obviously the balance of trade, interest rates, you can see here, the financial stability review. This caused price to have a catalyst effect of this much. That's it. So that much, that one news release from that period of day dropped price 400 pips, basically. Pay attention to that. That's something I'm giving out to you people there. Pay attention to that. Trust me. So that right now we're in a fundamentally driven market. So you need to be aware of all of that information is what I'm trying to tell you. So I'm gonna go back over to the questions and then see what's happening. What do you mean? True, keep it super simple and forget hundreds of indicators. How do you balance fundamentals and technical? So there, you just saw what I explained to you there. So I wouldn't balance it in a position where I'm like, it must be this, it must be that. I still just trade because, again, keep it super simple. Yeah, but be aware, psychology. So I'm aware that the balance of trades news release has a huge impact on price. So therefore my trade can either win, or there's a higher chance that my trade can either be a straight winner or a straight loser just based on this fundamental. If there isn't that type of fundamental there, you know, interest rate, balance of trade, then there's a chance that my trade will just go to wherever it does go to. So what I would do at that time is when that news release is about to happen, now I'm paying attention to that trade I'm in to see, yeah, if it's going towards my direction or if it's going the wrong way. If it's going the wrong way, then I realize that, hey, this is probably a loser. So anyone that was catching a continuation of a buy here, that news got released on this day, this week, sorry, then they're in a position where they're like, hold on a second, something's going on here. It's up to you whether you close it. That's when you make a decision. This is why I said dynamic trading right now. So you got to remember, when you do dynamic trade, you are technically affecting price. Sorry, not affecting price, you're affecting your trade. And what I mean by you're affecting your trade is that you could close the trade, it could go the right way eventually. It might just be a little pullback fake out. You could hold the trade, it could be an absolute loser, and you could have closed partial profits. That is all down to your that is all down to the amount of growth you've had in your account over the week, over the month, over the day, whatever it might be, however you calculate your data in terms of the growth on your account. Put it and leave now. Yeah. So it's again, that's all down to you as what you've made. That is how you've got to assess your account. That's how you assess those fundamentals being released and what you decide to do in any trade. Don't just close the trade if you're you know, if you haven't made your profits yet or anything, because you know it could be a winner eventually. If you've made an X amount of profit, maybe you said, let me just take this trade as well, but then you've seen that effect on that news is making the pair go negative, then you might say, let me put a break even though it's gone 50 pips and I'm trying to get 100 pips, let me put a break even here, because realistically it shouldn't go back to entry anyway, but if it does, then I don't want to be in the market, and at least it lets me know that, okay, that was a heavy impact on my trade. It wasn't going to probably do what I expected, and cool, whatever. Then you might check that pair 2 days later, it went absolutely the wrong way. Is where it is, literally. It literally is where it is. The best way to do it is just use TradingView. I've tried to use other ones. There are some, but it depends, because Trading View lets me use whatever I do use to be able to check charts and then backtest as well. I've tried to use MT4, but it isn't too effective. It's a bit slow. There is ones on MT4, but it's a paid one. It's like, I think it's like $70 or £70, I remember. Yeah, so even if there is a paid one for MT4, I can't remember the name. I have to look into it and then pass it on to people. There was another one I saw some other guy using on YouTube, but I'll have to check that one as well. But realistically, the majority of the time I just use Trading View. I'm more than backtest, and I don't actually backtest a lot of the time. I forward test, and whether I forward test with demo or live, that's what I'll do. I don't really like to backtest too much because backtesting is cool, but I want to forward test because I want to physically see what I've seen on a quick back test. So I might do a skim back test. So I'll be like, okay, this was the sell, I was right, this was a buy, cool. But now I need to know forward testing, when it did go there again, was it a buy, was it sell, what affected it? That's what I like to do because I was actually there at that period of time. Yeah, so that's the best thing to do, basically. For me, that's what I do. I forward test, I don't back test. I forward test most of the time. So always, so like I said, any trade I'm telling you here is based on what I'm saying. So like AU, I'm waiting for it to, so let's go down to another time frame. And technically AU has done this right now. So we can see right here. So AU has done a breakout. It's pulled all the way back. In theory, this looks like even a head and shoulders, a mini one. You know, it's a weird looking setup. You can see right here. So let's go to a 4-hour time frame and see if that is. Yep, so it's a 4-hour resistance level, support level here. So right now, so if I see 4-hour support, so if I see the market buying up from this level again with a nice engulfing candle, of course you might have got even in here, it pulled back, but this was NFP Friday, so everybody should have been aware of that when you're in a trade. Again, that's your fundamentals for you there. So now if I see next this week coming in, if I see an engulfing candle off of this level here, boom, it's just getting straight away. So let's just say an engulfing candle covers this red candle here, long position. Let's just say it came in from here and I'm a swing trader, stop loss just below these wicks here. So about 45 pips stop loss if I want to. And then my targets will be at least this level here. That's a 3. And then if it keeps going, my target's up here and that's a 7. And that's how I would trade like that. Just literally, because you can see how it did. It came down, broke out, broke down here, covered, grabbed any liquidity it needed to go here, bought back up after it did it. Obviously, this is a strong level because it wouldn't have made a buy like that if it didn't. There was obviously a fundamental event that pushed it back down again one more time. But where did it push itself back down? It didn't push itself back down and break this level like you saw GBP do. Was it GJ? I think it was GJ. You didn't see it break down this level anymore. Now what we have seen is the market is holding this level. GU, you saw do it. Now it's holding this level right here. Yeah. And now it can do a possibility if it does an engulfing candle off this level for a continuation of a buy. So that's how I can see the market, literally. And when I see, and what I have is I have Neo, just so people are aware of it. Like I said, it's not that I'm trying to do some mad promotions or anything, but this is what I have. I have Neo, that is this indicator that's been set up for me, and it gives alerts to anybody in the VIP section. So whenever we get a Neo alert here, this is when we will enter the trade like that. So Neo is based up on a whole bunch of confluences I've managed to gain over a period of years of back testing. It doesn't mean that every single trade wins. Nope. Okay, some trades can just be a loser. But when we do get set up, especially if it's like a level 3 Neo setup, then we take that trade. And those are the ones you can see in the Neo pip count before the whole release of the news. The news has just been making everything go nuts. But before the release of the news, we had a very good win rate with what Neo was providing for us, and it was providing at least 70% win rate on average. It was between a 60 and 70% win rate on average from every level 3 setup. The only thing for prop firm traders is that level 3 setups would only appear like what I'm showing you here every so often. So it might appear, usually it would appear about 3 to 4 in a month. But then sometimes you might not get one for a whole month. Like in January, I didn't. Everybody was getting very itchy in January. And when we did start to see setups towards the end of January, they hadn't finished clearing all the liquidity. So we had about 4 losers in a row. But then coming into February, we had 6 winners in a row. And they were massive winners. I'm talking huge winners. We're talking thousands of pips. So any loss you did have in January was covered. And that's trading for you again. That's what I said. People try and join my services and things, and they think that they're just going to start winning trades all the time. But I can't tell you that the market next month is going to be smooth or it's going to be rough. Remember, 4 phases. 4 phases literally in the market. So I don't know which phase is going to be exactly in. I'm having an idea that this could be an advancing phase from here on AU, but it might still be an accumulation, and then it might, or distribution, sorry, and then it might decline again in one more level. That's not my fault. That's nothing. That's no setup's fault. It just is what it is. So again, if you don't trade over the period of time, you're not going to be able to see any possible results, whether it's break even, whether it's profitable. You're not even going to be able to see that. Even if it is, obviously loss is lost, but you won't see it. So yeah, that's that one there anyway. That's AU. I believe I answered any question that was there. Yeah, cool. That was there. And then USD CAD. Oh, this is a nice long zoom for everyone here with loads of questions. I didn't mark out USD CAD. Crazy. All right, cool. So let's just do USD CAD quickly. We'll do it together. Yeah, it's on the Gbp CHF video. We check on my YouTube, it says Gbp CHF. It shows you how to mark out these levels, but I'll do it here anyway. So strange. So okay, so yeah, anyway, so we've got this here. So I start from the monthly time frame. We've got a monthly resistance, monthly support, go down to the weekly time frame, and then I'm looking for the same thing, any resistance or support levels. We see it broke this level here, so this wouldn't be one. Here would be one for me. So see the market broke down here, found a level here on the weekly time frame, then continued. So here would be a weekly resistance right here. And is there any weekly other ones? Nope. So let's go down to our daily time frame now. And then let's see if we see anything else here. The market's broke there. The market is on, the market's right now on a daily level right here. So just for the sake of it, because it stopped there, this is why you can see how important these levels are. Look at what happened here. Brought up to this level before, sold down off this level. In the future, now it's come back to this level. When it's gone to this level before, sold off of this level. Underneath it, sold below this level. Again, sold. But the fact it's done all of this time, it could break this level this time. But it's cool, just for the sake of it, it will change into a daily support. If it does break it going into next week, daily resistance level. So for this one daily resistance level, you had how many swing trades? Can you see what I'm saying? Off of how trade? So that was 800 pips. Off of this one, that was 300 pips. Let's just say 350 pips. That was 600 pips. That was 450 pips. That was 400, or let's say about 500 pips. And then possibly here, if it wants to again, it can give you another set of pips, if so. If not, and it breaks it, but you was trading from 2021, how many pips did you have in here? Even if you missed that one, still you had more than 2,000-3,000 pips off of that level, basically. Do you get it? And this is what happens. So now we're expecting for it to go to this weekly resistance if it breaks this level here. Is there any other levels? So just in case it does reject off of this level, I'm on a daily chart now, and here's my daily level of support right here. As we can see, the market obviously rejected off of there on a daily level. This is literally how I just do these lines. I do this with all of the pairs. How I trade them, I said before, I trade them through a circle of pips. I trade all of the currency pairs. Some of them I've X'd out of the list, like this one I don't trade no more, because it's for me, it's ADR is too small. So it doesn't give me enough pair moves in a swing trade when I'm looking for my circle of pips maneuver, which is trading from a top or a bottom. Just doesn't give it to me. It just does this weird thing where technically it doesn't trend enough. That's what I see. As you can see here, this is why you're catching all of these sells from the top. It's really consolidating, especially here. It's a massive daily consolidation. So it's not bad. I mean, you can still trade it, but it just wasn't working ideally for me. So just got rid of it. So there's a daily support level. Let's see if there's any other. So I don't need to mark out anything else, but I'll go down to a 4-hour chart as well. See if I see anything here. I see a 4-hour level of support over here as well. Right here. And yeah, that's about it. So right now, if I was taking the sell from here straight away, I'd be looking at the market going down to this level here. There's another 4-hour level of support here if I want to just be a bit extra. So go to, I don't know why it's doing that. So go here, and go here. 4-hour level of support right there. So that's what I'll do. So right here is a 4-hour level of support. Over here's another 4-hour level support. Here's a daily. So if it was to sell, here's my TP1, here's my TP2, here's my TP3. And again, if I was to find a stop loss level on this, if you're just basing on market structure, again, this is market structure. This is not based on your set parameters of your risk. Yeah. If you base it, remember your set parameters of your risk gives you a better chance of long-term consistency. Another reason why signals are hard for people to, we don't understand that signal trade providers are not bad, but people don't know this information I'm trying to say here. It's the psychology. So their psychology is, if I take signals, I'm just going to be able to win because the person says I'm going to win. But they're not realizing that really, if you want to be in signal trading, you need to be a dynamic trader. You can't just take signals based on what someone's saying and not know what the market's doing at any given time, not know what, you know, the understanding of the market. But if you was just to take it like this is a 3.6, yeah, risk to reward ratio trade with your stop loss above this last spike of the high. Again, but when you're signal trading, if they've given you, imagine I gave this to someone and said, that's a signal. Okay, that doesn't make no sense, because last week, have you been trading every single pair with a 60p stop loss and a 0.01 lot size or 0.02 or whatever? Have you been doing that? You probably haven't. So therefore, you're going to be trying to trade all different types of ways, and it's going to create you a problem long-term for consistency. It's not a problem if we win the trade, but when we lose trades, which there's a probability of people losing a lot of the time, yeah, then now you're in an issue where the signal service looks like it's making no sense to you, when it's not. It's because when that person gave you the trade, you wasn't supposed to put a 60 pip stop loss based on how much you can lose per day, per week, per whatever. You were supposed to put 30 pips. That's all. So when the signal provider does provide a winning trade for you, you know, and your take profit as well, it's not supposed to be 5. Your take profit is supposed to be maybe 3, because that is your parameters basically set on trading, and that's what you continue to do. That's what people are not doing when they're signal trading. They're not setting set parameters. They're using what the signal provider is saying, and that's how they find. That's why they're losing a lot of the time. That stop loss was 60 pips. If you increase the risk size. So basically, what's that? If you increase your risk,
come here.
If you increase your risk size, you said you need that 1 to 3, 1 to 4 then. So yeah, if you increase the risk on the trade, yeah, basically that's that. So basically, no, if you increase the risk on the trade, then you need to have, what's that? If you increase the risk size, you need 1 to 3, 1 to 4. Yeah and no. Yeah, no. It just depends. You don't need to, because you can still trade 1 to 1 and still make money, even with increased risk. Yeah, no. So yeah, if you want to get more money, yes, that's basically it. So if the tighter your stop loss, the more your risk going forward is, the more your reward is, then you obviously make more money. So you remember, because your risk is always the stop loss level. So your risk is there. So the more you risk, obviously the less you want to put in terms of your lot size, if that's what you're saying. But if you're talking about risk to reward, yeah, your risk should always be smaller. Long story short, your risk should always be smaller than your reward. That's the best way to put it. It should always be smaller. So the best way for you to do it is don't just enter the trade like that. Remember, you got to enter in your parameters of how you've been growing your account. And this is why when it comes into VIP service now, each individual person, once they get into a proper account, I work out with them how much they can lose over the period of time. This is what I do for them. So I'm like, you shouldn't be entering no more than this amount worth of stop loss in a day. This is what I actually do. So I break it down for them. So I'm like, let's just say in theory, I'll tell them you can't lose more than £20 a day in stop loss. If you're trading more than £20 a day, it doesn't matter. You can take 50 trades, but every single trade can only be based on that. So now you're not worrying about that. You're setting yourself up with probabilities. You just enter the chart and the trade, literally. So I'm like, you can only lose this amount. So whether you take 1 trade or you take 20 trades, up to you. Whether you take in that week, whether you take 1 trade, if you take 4, 5 trades, or you take 100 trades, up to you. Doesn't matter. But overall, you can't lose that much. So nobody that comes through VIP service actually blows, unless they do their own thing. They don't actually blow their funding account. Do you get it? They just impossible. Where I set up the rules for you and the math for you, you can't blow your funding account. The only thing you can do is emotionally trade and do it. Yes, that's different. But that's nothing to do with the rules I set. That literally already shows you your first problem. You broke the rules I gave you. So the lot size and the pip stop work together, but Can you risk 20 pence with 60 pips? No, I don't think you can risk 20. So obviously that goes down to account size. This is why I tell people £20. Oh, can you risk £20 with 60 pips? Yeah, you just got to lower your lot size. You can probably even get more pips, but that's all down to leverage. That's another reason why I started individually setting up people's risk, because I realized in VIP a lot of people had different leverages, different account sizes, obviously. So if I'm losing 2%, someone else, the way they're trading, is losing 20% of their account. Do you get it? So it's all down to your risk management and how much you've got in your account. And then it gets broken down for you individually. That's what I do. I break it down for them. That's all part of VIP. That's all part of the VIP, man. You gotta join that VIP, man. Giving out so much sauce here, man. You want me to start breaking down your risk management for you, man? Come on, man. You gotta join that VIP. I already given out 100, 1.3 hours. What am I talking about here, man? I've already been given 1 hour and a half, man, of risk. So it's not exact numbers. It's based on how much over a period of time you have, my friend. You need to break it down over a period of time. You have to break it down over a period of time. So again, I do these sessions all the time. You get more of these sessions on Sunday for VIP students. We get every Sunday. I get in with them every single Sunday. It's about an hour to 2 hour Zoom, and I'll break it down. We'll go through it. So either we're going through every single pair, but even if not, obviously they can ask questions as well. So yes, USD CAD, if you are looking to take USD CAD, you're looking to take sells. That's what I'll be looking for on USD CAD. Again, you're looking for market structure. Very simple. I don't even need to tell you where to take a trade. There's market structure right in front of you. I just drew out all the market structure for you as well, how you can do it. Look for a sell. If any new market structure forms in here, same thing. Just do the same thing what I've done here. You're waiting for it to hit a level, reject off a level, and then you're looking to enter the trade. I like that. From either a rejection of a candle close, it's up to you what you choose. There's no set values on what you do. Like I said, overall, a 4 hour candle should be good enough for you off a rejection of a level, but some people might use an hour, some people might use 15. It's up to you. I like to leave it up to the trader for what they can do. I told you the problem is risk and psychology. That's what it is. But in terms of USD CAD, I'm looking for sells, basically. Yeah, no, I hope you did help the others here, Tim. I hope you did. Yeah, you can't rush it, man. Anybody else got any other questions apart from Tim as well? Because Tim's been asking all the questions for everyone, and Cara as well. She's been asking questions and saying things. Anybody else got any questions? Anything in here? And SM asked questions as well. So I'd like to say thank you. Thank you to the 3 people that have been asking questions so far. I think someone else did on that's been speaking, but I'm not too sure if it was one of you 3. Let's see. Anybody else got any questions? If you have. What's that in must be great traders? No, that's what I say. I say people must be fantastic. You know what it is? I say people must be fantastic traders if they don't ask questions. But I'm like, guys and girls, if you join the Zoom, you should be asking questions, man. You're just doing yourself a disservice, because you got to remember, I don't have to do this, and there's people that are actually paying for this type of time from me. Do you get what I'm saying? Like, I could have literally just come on today and say, yeah, I'm looking for a sell here, looking for a buy here, but I'm not. Like I said, it's not about the actual, it's not trying to just make money off of traders in Forex for me. It's actually trying to teach people how to trade. If not, I wouldn't do this. You know what I'm saying? I don't have to do this. I've got other things I've got to do today, because I've got things apart from trading supposed to do. But I was like, I obviously prioritized myself to say, I'm going to drop a YouTube video today. But I said, okay, what would be better? Okay, let me give the traders trades. And I said, okay, what would be even better? As people know, that's why Tim came on straight away. He's been here before. I said, let me answer questions, of course. If people are here, that's what I'll do. If it makes sense for you. So here's a fantastic setup for you. And here's what shows you, right at the end. It's better for me to put gold at the end. So then whoever does stick around to the end of this whole video has learned a whole bunch of stuff that I've said through here and took notes. If not, then of course the source of gold, which everybody's eyeballs are peeled on a lot of the time, is at the end of the video. So I'm going to be putting gold whenever I do these videos all over the place. So if anyone's just watching for gold, go watch the whole video through if you want to catch this stuff. So here for gold, which was perfect for us. Now I've already drawn all the levels here. Right now on gold, this is a weekly resistance now. It was 1901. I had a different level here. I've moved around. I've done a few markups on gold, but it was 1901. I did tell people they could sell from. we can see from this level here. So let me just put 1901 there because it was a level I put in the free group for anyone to know. When everyone was catching the trades on gold this week, I put it here. I always have my free charts here in Charlie and the Chocolate Factory. And I put this gold trade here. Many times you can see here, I put this right on Sunday for every single person. So nobody could say they couldn't make money off of gold this week. I gave this out to everybody if they're willing, if they do trade gold. So there's money for their pocket. Like I said, I'm not trying to, not do a disservice for people. I'm trying to give people something here. And I told them 1901 is the level you need to look at. Prices obviously closed but below there. So it should be hopefully in a downtrend. This is the chart here. It's a downtrend from here. And then when we go back over here, let's just change this to 1901. I remember that was on the Sunday. And now we go back to 1901 here. And then how many trades did we have off of this level here? So let's go to 1 hour chart. Is main reason as I saw this, just so everyone to know. Again, this is what I tell you, when you pay attention to market structure, you start to see better trades forming here. I'm still in the sell on gold all the way from the top as well, by the way. And you can see right over here, I'm going to go into the questions in a second. You can see this daily candle rejected. So straight away, John's come to the chart. I've seen a daily rejection. I've had a downtrend from this level here, which is 1901. I said, hold on a second, a daily rejection. Amazing. I've told people straight away that, yep, the market can sell from here because the market has closed below this level. Decision meaning that the market structure has been respected below this level so far. That's what it's shown us. So we can only go on what it shows us because we're data analysts. We check. And I'm more of a technical trader than fundamental. I said you can enter from here basically, and you can catch a trade or wait to see what it does, obviously in London or New York. Me personally, because I'm already up, I said I'm already in profit. So this is why I entered this trade from here. And I was able to take this trade. And anybody else that did, this was like a 400 pip trade, I believe. Yeah, it was about a 400 pip trade. Then it was at another level. I was just using an example. So I didn't expect people to take that trade either. But then it came back to this level again. So let's just go down the time frame so you can see these entries better. And 1901 was here. So the market closed here, opened here. You can see there was rejections. No candle was breaking above here already. Sold straight away. So whether you waited for this and got in, completely up to you. If not, you can see these candles on a 1 hour time frame, but even closing bearish. If you want to go to the 4 hour time frame, makes it any better for you. You can see this 4 hour candle. What did this 4 hour candle do? Close, and it broke structure. So as soon as that broke structure to the downside, you could have entered on here, which was again the Sunday open of the market candle. And then we was waiting for the market to get back to this level again. You can see on a 4 hour time frame, just to show people. And this is what I put in the general chat as well. What we're seeing here, we're seeing 4 hour candles rejecting off this level. So as soon as you've seen this, at least even once, you could have entered. But the fact that it did it once, twice, and then a third time you even saw this, yeah, where it went all the way up and then closed below it, that was a perfect sign to enter the market. So you can be right. Remember, this is why you have risk to reward. So you could have been wrong the first time. You could have, you would have been right the first time, probably break even because it started to sell. Then you was wrong. Then you saw this, and then you entered again here because you've got risk to reward for a reason. 1 to 2, 1 to 3, 1 to 4. Remember, all about chances of you winning the market. You don't have to be right all the time. Stop thinking that, people. You really don't. Rejection, you've entered again because, hey, you've got 1 to 2, 1 to 3, 1 to 4. And then now it's gone down a certain amount of pips again. I think it was like 200 pips or 250, and you would have made more money. So it was 1, 2 trades, nice 2 trades set up from here. And then the week before I gave one from 1997. And I said that in the Zoom meeting, and that was perfect. So it was not there. It was, where is it? It's a nice one. Yeah, it was this one. It was this one here. So I actually gave this one. So if you was in the Zoom, the same Zoom like this 3 weeks ago, now it would be almost, I gave this whole trade out here. So you would have made that many pips if you was holding it from there. So I've got I had a position here, actually. I closed this one, but I've still got my position all the way from up here as well, which all of these trades I'm saying right now has been given out to every single person in this group for free. If you are here, if you pay attention to my charts, if you're in 25 different other groups, completely up to you. But if you stick around in my group and you take my trades as well, when I give them out, then there's a possibility if you're winning and losing trades. But like I said, on gold, I've definitely got a higher win rate than I have any loss rate right now on gold. And that's for this whole year so far. So it doesn't mean I can't go through a bad strat where I start losing trades, but I've been giving out gold trades, and a lot of them have been winning more than they've been losing. It'd be nice if people were posting the testimonials so other people could see this as well, because it's there. But if not, I always put my chart data to say this is what gold did today. Don't shoot the messenger as well. So it does correlate with gold. It actually does a lot, to be fair. I've been checking news release on gold as well, and oil makes a huge difference on gold. So yeah, you need to pay attention to that. No, it doesn't have to be my main living Forex. It makes me a decent amount of money, but it doesn't have to be my main living Forex. I do, I'm actually into Forex, I'm into music, and I'm into drop shipping as well. So I've got all three of them. That's what I actually do. So that's why I trade swing trading now. That's why I chose not to stop scalping. I was losing a lot of money scalping. It wasn't making sense in terms of everything I do. So I was like, hold on, let me swing trade, because I don't need to do I don't need to be in the market every single day, like trying to catch a trade and make most money. It doesn't need to do that for me. I can actually grow a chart and then have a bigger capital. I can grow an account, sorry, and then have a bigger capital to be able to trade. That's what I do. Can you cover? I'll do one of the indices because this Zoom is pretty long now, so I can't do. So pick one of the indices you want me to go over. I don't want to make the Zoom too long, because as much as I do want to do all of this, you got to remember, nobody watches 2 hours of a Zoom every day. You're not going to get 100,000 views on 2 hours of a Zoom on YouTube. People, unfortunately, people want me to just make a 5-minute video, you know, of how to make money consistently. And it really doesn't work like that. Everything I've spoke to you now, without me having repetition, I'll do. I've got 2 US 30s here. People need to make a vote. US 30 or NASDAQ, which one, please? So I've got 2 US 30 so far on NASDAQ. Which one? Guys and girls, come on, make a vote. What was I going to say? Yeah, again, you can see how much information I've had to give out here. Even though it's not telling you how to win a trade every time, it's still valuable information, because more of it is about psychology of actually trading, psychology of winning whilst you're trading and losing while you're trading. And that is what people struggle with. And so many YouTubers I've seen say it before. If I put a video out there that says, yeah, make 5K in 1 second, everybody comes to watch the video. Do you get what I'm saying? But when I'm actually talking about things that make sense and people need to pay attention to, there's a very small majority of my followers on YouTube that will actually watch the video, which doesn't make no sense to me. And then they'll still ask, why am I losing trades? Because you're not paying attention to the stuff that matters. That's what it is. It seems like we've got US 30 here, so we're gonna have to go to the dirty 30, mate. Give me a second, people. So you just have to give me 1 second. In fact, I should. So give me 1 second, people. 30, US 30. I hope you all enjoyed this Zoom so far. Nice Saturday. Like I said, I did this because I was going to do a gold video just showing those trades there. Then I said, you know what? It's all good, but it's the same thing. Just showing a gold video. Then I said I was going to do just a markup of all the pairs and everything, but then obviously it turned into a markup / Q&A. So I hope you all like it. It's lasted about 1.5 hours, almost 2 hours. So it's all good. Let's see, capital.com. To this one here. Okay, we are going back there. Okay, so I'm going to share the screen again now, people. Give me a second. Share screen. Boom, boom, boom. All right, cool. We are there. Everybody can see my chart. Let's get into it. Okay, so US 30, same thing. You can see I've got all my levels marked up. I am not I'm not in a position where I don't do this. This is what I do all the time. Keep it very simple, and I trade US 30 off of market structure more than even what I trade all my other currency pairs, like even in the VIP service. And literally right now, I'll just be looking for buys on US 30. As we can see, the market's all the way at a low, but I'd be looking for the same thing. But US 30, what I tend to do, because I know it buys a lot stronger than it sells, I would literally just enter a buy. The only reason I didn't enter this buy right now is because I'm already still in gold, and there was something, it was NFP, that's why I didn't. So right now I'm either waiting for them to come back down and clear this liquidity here, because they left a wick. So either they're going to clear this liquidity below here, and then I'm going to be looking for a buy like this. So I'm expecting them to pull the market back down again and then go and buy. or if I see the market, or if Neo gives me an entry in this trade, if Neo gives me an entry somewhere in this for a buy signal, I'm just going to take my buy signal, literally, because I know it buys a lot stronger than it sells. So there's a big chance that the market is going to continue to buy. But I was actually in this buy on NAS, this one that went up here, then it went up here and rejected. So it happens, US 30. Thank you, Vin. Yeah, that's why I try not to overcomplicate. I think I will explain more. That's what I do, but I don't overcomplicate Forex. That's one thing my main thing I said to myself, and I said I'm not going to do for people, is not overcomplicate. Yeah, no, definitely we make mistakes as well, mate. But the main thing I said is I'm not going to overcomplicate Forex. And this is why I know people want me to say, here, do this, do that, do this, and you'll make money. But it's like, no, just draw your lines and then wait for price to get to areas and then buy or sell. Yes, you can add one or two other things if you want to. Completely up to you as a trader. I'm not saying you can't add indicators or anything like that. Trust me, I've got indicators, but I have indicators on other charts as well that I can look at if I want to. Literally, but if you just draw your support and resistance, as you can see, I'm on US 30 now, so different trading instrument, same setups I'm looking for. So right now, if it clears this liquidity down here again, that's even a better setup. If it starts holding the support level, I didn't trade this because of NFP. That's the only reason why. If not, I would have got in from this buy, because it even sold down. I even actually did enter one on NAS. I entered a decent position. It was like a 0.30 on a funding account, I remember, on NAS. But then I was like, nah, where was it? It was somewhere, it was in NAS anyway, but it was like low like this as well. And I was like, let me enter it. Then I said to myself, I was in other trades, and I was like, Joe, you're in other trades. You don't need to enter this pair right now just for the sake of it buying. I don't want to start looking at too many pairs. I just left it. And lucky enough I did, because it sold with the NFP news. It actually sold, it didn't buy. So right now you can see they've gone down here. They've left a bit of liquidity, but we can see continuations of buys on this pair again. Let's go here so I can give you more of a direct answer. You're seeing this 4-hour level here has been respected before. So if price stays on this 4-hour support here, then you're looking for an engulfing candle off this 4-hour level of support like you've seen previously here. You're looking for another engulfing candle, then you can say you can get in. Or, to be fair, I can't lie to you, you could literally just get in this pair now. The problem is people just have too much. So if you are to get in this pair, this is what I would usually do on NAS. I'd keep my leverage lower. I would enter here, and I'll just put my stop loss below there, win or lose. It looks like almost a head and shoulders. You can see a left shoulder here. I'm on a 14-minute chart. Let's go to a 4-hour chart. Yeah, so it technically could be, it's not a head because it would have poked down a little bit more. But let's see. Yeah, it could be left shoulder, maybe. So I would put my stop loss down there below that low, and then just put my take profit for a long-term swing trade. That's what I do. Lower leverage and just do that. That's what you could technically do, because this is this pair's got a buy, and look, this is a strong level of support. So there's a high chance that it's going to respect this level and then continue to buy. And then this was why it kept selling as well. I'm going to go to any questions after. This is what I told people. Look at it. So now we go to a monthly time frame. So it's even better for me. That big, so when it does huge moves like that, you know liquidity is being left behind. So what did it do before? It left all this liquidity and then tried to buy again here. Then it had to go in April and cover all the liquidity it left down there, because NAS doesn't want to leave liquidity behind. So once it covered all that liquidity, now it did this last push to cover the rest of the liquidity down here. Yeah. Now it's left liquidity to the upside, which previously we've only seen smaller liquidities to the upsides. What's this telling us right now? This is telling us that in May, we could be seeing a buy. So we're in May right now, sorry. Yeah, we could be seeing a buy, because if it leaves liquidity, it's only going to leave this liquidity here right now. It's going to leave this one over here. So we could be seeing a strong buy to cover this liquidity, and NAS loves to cover a liquidity. The higher the time frame, the better for you. So we could be seeing a strong buy push here. So once Neo gives me a certain type of setup and an entry, by golly, I'll be in this trade for a entry, and I'll be giving it out to anybody in the VIP groups as well. So I'll be looking at NFTs, cryptos, like. I'll definitely be looking at cryptos as well. I think you should be looking at buys on cryptos. I'll go check cryptos. So that's US 30, first and foremost, before I jump all over the place. That's US 30. I'm looking at continuations of buys, but right now I need to see the market open a bit more because I didn't catch this very bottom here. There's a little bit of liquidity there. I just want to see the market holding a level better. There is a 4-hour level of support here. So you want to see it either respect this 4-hour level of support or go to this weekly level here and respect this level. And then you want to look for continuations of buys. So that's what you want to be looking for, basically. So something like that, and that'd be better for you. Now when we go to where we're going to, so I just want to go to Bitcoin quickly, just to show you. If you go right there, BTC USD. So I only look at let's go here, right here. I've already marked this out for every single person. I gave out this buy, it just did, but now I know it's pulling back down. So this last buy it did here, I gave this out to everybody. Now we can see it's pulling back down. It's got liquidity down here to the downside. So we could be seeing BTC going back down to this level, but you want to look at buys. This chart was given out in Charlie and the Chocolate Factory for everyone as well, with all of these levels. So you want to be looking at the market going back down to this level, and then you want to be putting money back into the market once it does go down there, because you can see it's a huge buy area from there. So with cryptos, it's like currency pairs. You want to make sure you put money in, take money out, put money in and take money out. It doesn't mean all your money. That means your profit and leave investment in there. And people don't do that enough with cryptos. What they try and do, and I'm not talking about doing it every day, obviously when it does a big move, take profit, leave profit. People, what they tend to do with cryptos is they put money in and think, yeah, it's just going to grow to the moon. But if you actually treat it like a currency pair, you'll make more money over the year with cryptos, and you'll actually be able to withdraw money and put into other investments if you do it that way. No, we'll go digital currency. Of course, we're going to go into cryptos. We're definitely going to go digital currency. It's a given. It's a given. It makes sense. Come on, paper money. Just think about how the world moves and the history of the world. We're going to go into digital money. It's a given. We don't know exactly what day, but it's a given. They'll obviously start pointing. They've already started to implement slower things. I believe that once the metaverse becomes more of a go-to thing, because they're saying the metaverse is the internet 3.0, I believe, or it's basically the next level of the internet. That's what the metaverse will be. So one day the internet wasn't something, and now it is. I'm talking to you guys and girls for it right now. If you told someone this, 200 years ago, they would have said you're crazy. So it's one of those things that eventually it will. And of course, think about it, cryptos make perfect sense for us to be able to spend in the metaverse. So I'm just using those two and two together. And I'm looking at all my investments personally for metaverse ready. That's what I call it. So everything I'm doing is metaverse ready. That's what I'm trying to do. It doesn't matter what I'm doing. It's all going to be designed for metaverse ready, because it makes sense, because you'll be one of the first people to do anything if you make everything metaverse ready, basically. And if people have to accept it, the metaverse is not going to be something that doesn't stay. It's going to come. It's there, literally. I don't do NFTs though, to be fair. I've got an NFT on like a game I play, but that's about it. I've got a character on a game I play, and it's an NFT. But this game isn't a big game yet. But to be fair, NFTs are selling for a lot of money on this game though. Kid you not. People are selling NFTs for like 20K on this game and 50K and stuff like that. Don't ask me why, but it just is. So I don't do NFTs yet, but it's something that of course I would establish. But in theory, Big John is an NFT. That's why you see Big John as an avatar, and that's why I don't speak. It's an NFT. So it will eventually be, the more and more I build the brand, by default, it will be an NFT. So people want to buy Big John NFTs. Do you get it? Literally, it's part of the reason. I had the whole idea of this avatar thing for ages now. So if you look at it from that experience, that's what it is. It's not, it's literally Big John could be on a shirt. Look at the character that you see me speaking of. And that's only one design of it. If you go to my Instagram, you can see other pictures. I've got so many different pictures of Big John in different ways. So yeah. It is what it is. So that's pretty much everything there, guys and girls. If you've got any other questions, please let me know. If not, we'll call it wrap up there. I'll go do some other stuff today. Of course, this is going to be on YouTube. It's a lot. I'm not too sure how long it was. Can't see the timer on here. That's pretty much it. Anything else, people? Any other questions? No problem at all. Hopefully everybody took something from it. Hopefully it all helps you in some way, shape or form. Again, keep Forex very simple. You will win trades, you will lose trades. That is the hardest battle you're going to have in Forex. But once you realize that when you keep it simple and you keep just doing the same thing and work on your risk to reward more with whatever strategy you're trading, you don't have to trade the way I'm saying, you know, but if you want help or want to join the way I'm trading, hit me up and join mentorship, VIP, whatever. But keep your risk to reward consistent. Realize there's going to be good and bad phases in the market with whatever you're trading. Accept that, stick to the same thing, you will eventually make money. Oh yeah, the markets will survive, man. The markets always survive, man. The markets will survive. Only obviously once it changes digital, but it's technically digital now. The only even the money in our MetaTrader is digital in theory. It's not cash we're trading in terms of what we, you know, draw out from the market until we withdraw it. So realistically, yeah. So it will survive it, man. You got to remember, if the market goes down, the world is over, literally, because it's the infrastructure of the world. That's what we're trading. That's why you see all those news events that popped up. That's the infrastructure of the world, countries making decisions. So the market's going to survive. It's not going to survive, man. Even if we did, unfortunately, go into a World War III, I guarantee this market will survive. It would just be a bit different entirely, but, you know, but it will survive. It'll survive. So it is what it is. Yeah. All right, then, people. I'll leave it there. Yeah, obviously, if there's a massive nuke, then that's a whole different case. But, you know, God forbid that ever happens. But you gotta remember, for that to happen, that would have to be everywhere because there's different worlds, different countries, sorry. So it would have to be everywhere. But no problem. Take care, people. I'll see you later and have a good one.